Okay, good morning, everyone. Welcome to the fourth series of the Legal Awareness webinar hosted by Sholakwa Adeshu and Associates. As I said earlier, that I've had the privilege to be able to moderate this program from the beginning, and I'm glad to be able to be a part of it again today. We've had wonderful sessions addressing different areas when it comes to a legal topic, the legal topic in our country, in different sectors. And I'm excited that we're moving to a different aspect again today. And this time around, we're talking about securing your business in the existing and emerging tax regime in Nigeria. I know a lot of times when we hear the word tax, it's like it gives us a different kind of feeling. And that's because, of course, we have all of our reasons, our thoughts, our perception of how things should be done in our country. But then one of the things I know this program or this webinar is going to do for us is not just open our eyes to the understanding of it, but allow us also learn from industry experts, thought leaders, who can share with us what we need to do and how we can position ourselves in our business, and even either as an entrepreneur or maybe as an employee. And I know that for the next few hours, we're going to be learning from 3 different facilitators who will share with us the light, the understanding, the things that they've learned over the years, their experiences, the challenges, things that you can now take and take back and apply to your own business, and then ease yourself of any form of pressure when it comes to tax. My name is Bukola Ashogbon, and I'm an HR professional, and I've been in that industry for some years alongside with communications. For me, being a part of Legal Awareness webinar has opened my mind to understand, how we need to position ourselves even in the HR profession. The last time we had the webinar, we talked about employee rights and employer rights, and it was so exciting because a lot of things we didn't even know that we had as employees, the rights and the places and the positions we need to take. And then the employers themselves, how they need to position themselves to ensure that their employees are, growing, and then their career is growing, and then their businesses are not, impacted by one decision being made by an employee or an employer. So it was a wonderful session, and I know that this one will be way, of course, get better and better for every session. All right, so straight up, we're moving to our first facilitator, who will share with us an overview of the taxation laws in Nigeria. It's good to have that first touch of even knowing and everything that comes when we're discussing taxation. And Barrister Sholakwa Adeshu will be bringing that to us in the next few minutes. And I want us to just, come with this understanding of, how will I say it, unlearning and relearning. Because for every time we get new information, it helps us be able to see differently. I read a little bit a biography of, or rather just a little summary of who Sholakwa Adeshu is, and then she can talk more about herself when she starts her session. So Sholakwa Adeshu is a legal practitioner, a chartered company secretary, a property consultant, a teacher, an entrepreneur, a conference speaker, and facilitator. Of course, she's the host of the regular Legal Awareness webinar series via Zoom, which has trained over 200 participants, subject of enterprise, governance, partnership, employer-employee relationships, as I mentioned a few minutes ago. She has published many articles and has authored 2 books titled Your Business and Your Business Legal Companion, Business Incorporation and its Dynamics, and Your Business and the Law. She's the principal partner of Sholakwa Adeshu and Associates with over 16 years experience and expertise in company law and practice. She serves on the board of some companies and non-profits as legal advisor and company secretary. All right, so please, with a round of applause, you can use the chat. Please welcome Sholakwa Adeshu to take the first session of this program.
Hello, good morning, everybody. Can you hear me? Let me know if you can hear me clearly.
Yes, yes.
Thank you. Thank you. Let me first thank you, Bukola, for helping us to moderate this session since inception. It's been a delight. Thank you. Again, I want to thank everybody that is here. Of course, before now, we've always done this absolutely free of charge. And we also thought it was important that we move a little higher so we can go beyond just giving you mere knowledge on the peripheral to giving you detailed information, know-how, skill, and competence that will enhance our business. So for all of us that have taken our time and put our resources, let me say thank you, even though albeit a mega amount, but I appreciate that you had to make that move in this economy. And it shows for us your commitment to your own progress. So thank you. And then again, I want to say thank you to all my invited facilitators. Trust me, we are in for a very super time. I've had the privilege of going through some of their slides, and I'm like, okay, I have to keep my own very short so we can get owners or non-profit organizations. So once we have a clear understanding of the legal framework, then we'll leave the room for the experts to give us the detailed nitty-gritty of what we need to do. So I'll be sharing my slides quickly so we can go through it together, and I'll briefly speak to this document. Okay, great. Let me know if you can see the slide.
Yes, we can see it.
Awesome. Okay, so what I'm doing in this short session, I'll try to keep it within the next 20 minutes, and then whatever questions we can quickly address before we then go into facilitators. So Bukola has spoken to this. Thank you. It's been 16 short years of legal practice, and I can tell you we're still scratching the surface because law is very, 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 very broad, and I thank God for where we are. So today we're looking at tax. Basically, of course, taxes are, as we all know, it's a compulsory financial charge that is imposed by government on workers' income, business profits, or added to the cost of some goods and services or transactions in order to fund government spending. It is just basic. The whole essence of taxation is that when you are in a civilized society or when you are in a community or a society, then there is a need to have a pool of funds from all members of the society, which will be used to build the community. That's the whole essence of tax. And of course, it's important to know that it can be charged or imposed on your income, any worker's income, or on business profit, or added to the cost of goods. And we'll see the details of that later. So the applicable laws in Nigeria that we have been able to put together here. You have the capital gains tax. We're going to go through them. It's in no particular order. Companies income tax. We have the personal income tax. We have the value-added tax. I'm sure some of us, of course, have been very familiar with these things. We've heard about them before. We have stamp duty. The stamp duty itself is a form of tax on transaction. On financial transactions and other kinds of transactions, or even on documents. We'll look at it later. We have the National Information Technology Development Agency tax. This is a kind of tax that comes on on companies, on limited liability companies. We have the petroleum profit tax. We have the tertiary education trust fund tax. These are, some of them operate as levies and others operate as tax. Then we have the taxes and levies that is charged by local government. And then we have other laws that control this taxation. You have the Federal Inland Revenue Service Act. We have the Finance Tax. We also have the Tax Appeal Tribunal Law Act that was instituted, and unfortunately, okay, I think it was left out here, but we'll look at it, we'll make reference to it later. Okay, so very important thing to know when we're talking about tax is the subject matter of residency. We need to look at the residency. Who are the taxable persons? Who is a taxable person in law? A taxable person is any person in employment, that is talking about individuals or business owners. We did mention that, so whether you run a limited liability company or basically business as a business name, then you are subject to tax. You're subject to tax. Then also Nigerian companies are subject to tax. Of course, knowing that when you incorporate a company, it moves that company to a legal person. So you become you become a person who is taxable. Don't worry about the slides. We'll talk about it before the end. We'll be able to give slides to everybody. But I hope you're seeing it as I'm talking. I think it's Ugochi. I'm not sure if I saw that comment about the slides. But not to worry, if you're not seeing, let me know, okay? Nigerian companies are subject to taxes. So, great, thank you. Non-residents who derive income from Nigeria. So you are not Nigerians that are not in Nigeria, or foreigners that do not live in Nigeria or derive income from Nigeria are subject to tax. So we're talking about shareholders of companies. So you live in London, but you're a shareholder of a company in Nigeria, then your income derived from your shareholding in that company in Nigeria will be subject to tax. Again, foreign companies that operate in Nigeria are also liable to tax. We know also lately that even unregistered business owners, or I don't know, for those of us that are familiar with the development, you know that a number of companies that operate in the technological space, they are not within Nigeria. So you have them like Facebook, you have Twitter, and lately the federal government made it clear to them that they are going to be subject to certain kind of taxes. We'll be looking at those details. Even because they derive income from Nigeria. So foreign companies that are not residents in Nigeria, foreign companies that are not resident, operate in Nigeria but are outside the Nigeria, are also subject to tax. Then on registered business owners, so that's a large chunk that we have in Nigeria, the informal sector. Those selling in shops and kiosks by the side, wayside, they're all subject to tax. Unfortunately, our government has not been able to create very proper ways to capture all of these people into the tax pool, because as a nation, we know that this tax is supposed to be part of the major ways our nation is going to be taken care of. Of course, when I talked about the tax and residency rule, is that the important thing is that normally you're not supposed to be subject to tax except you're a resident in that country. However, where you do business in that country, in spite of not being resident, then you're also subject. If you take profit, you take income from that place, even though you're not resident, then you're going to be subject to tax. Okay, let's go on. Okay, the other thing is, who are those that these taxes are applicable to? Sorry, persons to whom taxes are, okay, I think we need to move first. Great, so we go to personal income tax. I'm just going to quickly look at each of these, some of these taxes that I've mentioned. Personal income tax is applicable to employees. So if you work within any organization and you are an employee of the organization, then you're subject to tax. You'll be expected to pay tax in that nation. Again, or in that state, and personal income taxes are accruable to the state in which you work. So if you work in Lagos State, it is the Lagos State Internal Revenue Service that can charge you your tax and that are entitled to receive your personal income tax. Of course, we have Mr. Igo here, who is from the Lagos State Internal Revenue Service and is going to be giving us more details into these things. Of course, self-employed people too are expected to pay personal income tax. You do that by doing usually do a direct assessment that you can know what to pay. You walk into their office and they will tell you what you pay annually, and that will be all. Failure, important to mention here that failure to pay tax is actually a criminal offense, which is liable to punishment. And it's important that I state the word criminal. It is a criminal offense, so that you know that when you are given a penalty, you are either allowed to pay a fine, or it can also lead to imprisonment, or both fine or imprisonment. Then the company's income tax, that's the tax to be paid by companies, limited liability companies in particular. So a company that is either having turnover of 25 million or 30 million or 100 million. So what the Company Act did is to say which kind of companies will then be subject to tax. This company income tax is tax on profit, accessible profit of an incorporated company. So it's not just turnover, but on profit. However, to determine those that will be liable, the law looks at your turnover. So if your turnover is below 25 million, you are exempted from paying tax. You do not have a tax liability as a company. For company income tax, there may be other taxes that you will be liable for, but for company's income tax, you would not be liable. And other would also, if it's 100 million, between 25 and 100 million, you are subject to 20% accessible profit tax. And then if it's beyond 30, if it's beyond 100 million, you have 30% to pay to the government, okay? Then another tax that we'll be looking at, and I'm sure this time, management consultant and chartered accountant, Mr. Olani, that will be delving seriously into this one. It's the federal taxes. He will be dealing with limited companies taxes. So he'll be looking at the VAT. The value added tax is a consumption tax, is on purchased goods and services. This is subject to 7.5%. You have 7.5% on each good or service that is rendered. Of course, there are goods and there are services that are exempted. Some of them were highlighted here. You have medical, pharmaceutical products, and processed food. So our everyday food that we eat in the market is not subject to VAT. Educational materials are not subject to VAT. Non-oil exports are not subject to VAT. So it tells you that if you are in the business of exporting anything that is not oil, then you can be sure that your tax liability is significantly reduced. Again, Section 35 of the VAT Act specifies exemption defaults, punishment for default. It's also important to know that a recent court judgment about VAT has brought about a bit of changes to which government agency is entitled to receiving tax. We have the tussle between the federal government and the state government. As it is, the state of the law currently is supposed to be the federal government. However, the states are contesting this matter is currently on appeal. And so as it is, everybody is still expected to maintain status quo to pay to the state, or some position of the law is that you can hold on your VAT for now and put it in an account until the judgment is determined to know which agency will be entitled to VAT. It's critical that every organization at this point sit down to look at it thoroughly to say, who do we remit to? Because if the judgment is eventually in favor of the states, everything you have remitted to the federal government might become an issue or is subject of controversy. So those are the things I just want to talk about briefly as far as VAT is concerned. Then another important law that would, as far as tax is concerned, is the Hotel Occupancy and Restaurant Consumption Tax law. This is only applicable in Lagos, and I'm sure Mr. Iri will delve in details into it. For us in law, this particular law, there is a conflict between it and value-added tax. It's like putting consumers to pay the taxes twice, a double taxation issue, because both hotel occupancy and restaurant consumption tax and value-added tax are sales tax, and they are all applicable to the end user, the consumer. The companies or the businesses are only operating as collectors on behalf of governments. And so what the laws are doing right now is asking users of hotels, event centers, halls, and recreational centers to be paying sales tax, to be charging their clients sales taxes twice. It's been subject to litigation. Attorney General of Lagos versus Eco Hotels. In 2008, this was a landmark judgment at the Supreme Court, where the Supreme Court actually decided that as a sales tax, you're not expected to charge citizens twice. And so the Lagos state government was precluded from collecting this tax, and it was said the verdict was that the federal government was entitled to collect the tax. However, Lagos state government still charges this tax, and I'm glad that Mr. Iri is in the house today, and I'm sure that he will be able to put this to rest, and we know the position of government on how to enforce the law as it is. Then we'll look at the capital gains tax. The capital gains tax, this is a tax on profit from disposal of assets. So whether as an individual or as a corporate body, you dispose your assets, then you pay a capital, because from the name you can see it's capital gains. That's a gain on capital, that your assets that you dispose, you're expected, you will be charged 10% to pay. So you sell a land, and for those of us who have had cost to register properties in Lagos State, you see that part of the condition for obtaining a C of O or obtaining a governor's consent on any transaction on your land is that you pay both you, the person acquiring, the person selling must file his capital gains tax, evidence of payment of capital gains tax before that transaction on change of ownership will be effected. We also know that this is also applicable to intangible assets. So you're selling intellectual properties, trademarks, patents, all that will be subject to capital gains tax. However, there are exemptions. Of course, you're selling your shares, the exemption, you're selling stocks, government securities is exempted from capital gains tax. Okay. Yes, the withholding tax is another tax that we need to know, and I know this is not so common for a number of us. Perhaps you're wondering, what is withholding tax again? This is an income tax paid to government by a payer of an income rather than a receiver of an income. So it's often charged on services, professional services. Your organization, for instance, engages in the service of an accountant. And in paying the accountant charges you so and so for his professional service. You are expected to withhold a 5% that you remit. If your company is a business name, you withhold the 5% of that sum that you remit on behalf of that professional. However, if your company is a limited liability company, it's a 10% that you will withhold. If it's a business name, you remit to LIRS. or the State Inland Revenue Service, depending on which part of Nigeria you are in. And then if it's a federal, if your company is a limited liability company, you're expected to remit to the Federal Inland Revenue, FIRS Service, Federal Inland Revenue Service. Okay. Of course, penalties for non-payments are there. Yes, these are quite a number of penalties are spelled out. And this particular tax is a bit technical, and certainly you will require the service of a tax consultant to help you know where you can, where is applicable and where is not applicable. And I'm really hoping and trusting that our facilitators will do justice to able to tell each of us how to go about withholding tax, where we need to withhold from clients or from service providers, and how to remit these taxes. We'll also look at this other tax, the tertiary education tax. This is a tax that is chargeable on limited liability companies, except your company can be a limited liability company and still be a small company. It's a small company if your turnover is below 25 million naira. If your income or your turnover, better still, is below 25 million naira in a year, and your company is regarded as a small company, even though you are a limited liability company. And in such cases, you would still enjoy exemptions from a lot of these taxes, a number of these taxes, okay? But if your turnover is above that, then you will become subject to this tax. It's chargeable at the rate of 2% of your assessable profit. This is supposed to be a tax that is paid to enhance tertiary education in Nigeria. I'm sure, like me, some of you will be thinking in your mind, okay, they're collecting this money, why is ASAALAW on strike? Okay, let's save that question for government officials. Perhaps they will be able to help us. So penalty for non-payments is spelled out, either, of course, in fine, as I've stated here. Some of the penalties are still very small. So in my opinion, they are very small because the laws have been made long ago and it has not been reviewed. So if a company is earning huge income, 1 million naira may not be a big deal, and so they can choose not to remit the tax. Then another funny tax that we have is the technology tax. This is based on the NITD law, the National Information Technology Development Law, which puts a 1% tax on companies, of course, most of the time on telecommunication companies, cyber companies, internet service providers. So for some people who are smaller internet service providers, then they should know that they have these taxes to pay. Of course, banks are also subject to this tax. I won't spend so much time on that. Then we have the petroleum profit tax. This has been largely changed by the introduction of the Petroleum Industry Act, which was recently passed to law 2021. But the important thing is that all of these oil companies, apart from company taxes, apart from education tax, apart from technology tax, they will be subject to other taxes. Okay, so very important. It's also important for me to state here that apart from limited liability companies, we have NGOs, yes. So for NGOs that are in Nigeria, importantly, because you're not a limited liability company, or you're not a profit-making company, then what you'll be subject to basically will be PTA. That's the first one, PITA, personal income tax. That is where the organization have employees. So when the NGO has employees within, and that are salary earners, people earning income from the NGO, then they will be subject to taxes. A number of these other taxes, the NGO is exempted from it. Remember that most of the time when you talk about taxes, they are put on profit, accessible profit. So that becomes a major distinguishing factor for NGOs and non-profit organizations and other companies. However, I think I've talked about this before in our previous webinars. However, where an NGO engages in business, engages in a profit-making business. For instance, you'll have NGOs that then go into NGOs own schools. NGO can set up a business name to do a business so that they can make money to run their NGO. It's good, it's allowed. I've always said that oftentimes we mistake this non-social enterprises for NGOs. There are social enterprises that are not, that can make profits. But, and there are NGOs, they can make profit from doing businesses. However, the important thing is that you cannot take the business, you can't take the profit of that NGO for the directors or for the owners or for the board members or the trustees. So where there are businesses within the NGO or owned by the NGO, then that business will be subject to taxes. That business will be subject to taxes. So, and I'm sure that maybe at the question and answer time we can look at it. The local governments taxes that we have, some of them operate as levies, and levies are charges that are made before tax. So they are not considered before, yes, they are charges made before tax. So what I mean that is that it doesn't give, it doesn't recognize your profit. It's not about profit. It's not about whether you make profit or not. They're just levies that you're expected to pay. And I'm sure the next facilitator will do justice to that as far as local government is concerned, and to tell us the appropriate agency to pay these monies to. Then stamp duty taxes are charged by government, either states, it applies to states or to the federal government. Stamp duty is payable on agreements. So you have documents, agreements, partnership agreements, sales agreements, any documents and conveyances. You want to buy a land, you transact, part of it. That's why when you are also registering your land transactions, stamp duty is part of the taxes you pay. We also know that under the Finance Act, tax duties were introduced to bank transactions, and all of us get these alerts on our phone on each transaction that is deducted. All financial institutions are required to charge stamp duty of 15 naira on all transactions, particularly, I think, from 10,000 above. The Finance Act creates certain exemptions, and let me just quickly look at that. There are exemptions for small companies. So if your company is a small company, remember the definition of small company is that your company turnover is below 25 million. Currently, the new CAMA and Finance Act of 2021 allows small companies to be largely exempted from taxes, including VAT, including tertiary education tax, including companies income tax. The exemptions are there for small businesses. The Act also increased VAT to 7.5 from 5%. Non-resident companies carrying on business in Nigeria now to pay company income tax. Profit from exported goods are exempted. I've mentioned that before. All these were new provisions from the Finance Act. And okay, and then we quickly go. So now, rights of a taxpayer. What are my rights? Yes, so we've talked about our obligations, what we're supposed to pay. Our rights, number one, is that you have a right to contest the tax demand. The Tax Appeal Tribunal Procedural Rule makes that clear. Every Nigerian citizen has a right to contest a tax demand that you feel is not correct, that you feel is not equitable, or that you think was falsely done. You can contest that. However, you must know that when you want to do that, you must have all your account books properly detailed. And that's why we have decided to bring in our accountant. The second session will be looking at how to put your accounting record in order so that you can be sure of the taxes you are liable to. And then when the tax authority, if you want to appeal, certainly you must be ready to present on your books before the courts and the tribunal for you to prove that you didn't make that much income they are demanding profit for. Okay, you also have a right to be informed. And I think this is where our tax agencies have a lot of work to do. We need to, they need to inform people, inform taxpayers of the tax liability, because I don't think a lot of Nigerians have adequate knowledge of the tax that their tax liability. Again, you have a right to data privacy under the Nigerian Data Protection Regulation law. It's important we have a right to data privacy. That means that the fact that the agency cannot just take your information and use it against you. If there is any reason, they would have to comply with the laws as far as data privacy is concerned before they can release information regarding your tax position to any other agency of government, again, or to anybody demanding it. Just as we have, when it comes to our financial transactions, the bank also owes right of privacy and all that. Then, fourthly, the right to be given a tax clearance certificate. Every citizen has this, and I'm sure for those of us that are employees within an organization and they've been deducting tax from your salary for years, you're wondering, I don't even have any evidence to show that I'm paying tax. I just know that they deduct it. I think these are things we need to know. Some of us need to walk into our HR department and discuss this, have this conversation with them to say, okay, I've been having this, I just want to have the proof of payment so that you can use it to tax as it's your right. So for as long as you pay tax. Okay, so I'll round up very soon. I'm sorry, I've gone beyond my time. Tax evasion is a crime. It is a crime. It is a crime, and you are it is punishable either by fine or by imprisonment or both. However, tax avoidance is a skill and every organization must have. It is in law, it is right, it is okay to avoid, because there are legal means by which you can avoid taxes. And some of these measures include things we do, includes pensions. For instance, organization that enroll for pension administration, it reduces the taxes they pay to government. Organizations that engage in corporate social responsibility, it has an impact on the taxes they pay. Organizations that provide insurance, I can put that here, sorry, insurance for their staff, or insurance on the organization, all these go along with to reduce taxes, and these are what you call strategies for tax avoidance. And so it is legal to look for strategies. So you find some big organizations starting foundations. That's like setting up NGOs and put funds from the organization to push their foundation. It's also a tax avoidance strategy, because you're showing that you are using the funds for some other goods, and that reduces the tax of the organization. So sometimes it's not that you really love, it's that there is methods to ensure that taxes are reduced. Okay. Wow. Okay, so I don't think I would have the time to go through this. Let me just end here. I'm sure for questions, we can address some of these issues. These are just a few statistics I wanted to talk about the tax collection rate in Nigeria and World Bank assessment. But let me leave that to some of our other facilitators to handle. Thank you very much.
Thank you so much, Barrister. I'm so grateful. We have two questions already waiting. So the first one, are tenants occupying commercial spaces for commercial purposes obligated to pay VAT on rent to the landlord?
Okay, tenants, please let me have that again.
Tenants occupying commercial spaces for commercial purposes, are they obligated to pay the VAT on rent to the landlord?
No. For instance, VAT is a tax, the tenancy laws, rents and landlord relationship is governed by an entirely different law. And as far as taxes are concerned, rents, as far as premises is concerned, government charges what you call business premises. There is a tax, and I'm sure Mr. Iruru will speak to it, business premises tax that is paid by every employee.
Okay.
It will speak to that. Let me not jump the gun. It will speak to that, and it's actually a very small amount. So your rent is not subject to tax. It's not subject to VAT.
VAT. Okay, cool. The second one, for NGOs doing no business, is funds raised for charity work considered as turnover and subject to tax?
I'm not sure I got that right.
For NGOs, can you hear me? For NGOs.
Okay, I think I spoke to that earlier.
Okay, clarifying that
NGOs doing no business.
Nothing, yes, no business.
Yes. Okay, so you're not subject to, like I said, NGOs ideally being, if they are non-profits in stricter sense, non-profits, then you are not subject to tax because tax is supposed to be on profit. However, there may be other taxes that you can be subject to, like a personal income tax. And personal income taxes will be charged if you earn income from that NGO as an employee. So if the NGO has employees, you have an office, you have secretary, you have a chief executive, for instance, of the NGO, and they take salaries from the NGO, then their salary will be subject to tax because you're expected to file in your payee. They will be under the pay as you earn. Remember, we talked about tax being a compulsory levy on income. So if you're earning income from that NGO as an employee, then that employee's salary will be subject to tax. The NGO in itself will not be subject to tax.
Okay. So now the final one.
Similarly, an NGO would also be subject to VAT when you do transactions, remember, sales and services. So goods and services. So VAT in the process of your NGO operations. For instance, maybe you put up a program that you want to, you are inviting like a conference, and you're doing for a group of people, and in the process of that, your program, there will be services that exchange hands, there will be goods that have exchanged hands. It is those things that will be subject to tax, and it's important that as every organization, you must have an invoicing system that leaves room for VAT charges. So the same for withholding taxes. Remember, I talked about withholding taxes being charges that you collect. If someone is paying you, then if you're paying someone, then you withhold on behalf of government certain amount. So these are, if you're dealing with professionals, if you're dealing with, for me, it is the collection method that government has not really perfected. Ideally, all those transactions should be subject.
Okay. Oh, I'm so sorry. I think we lost Barrister Sholape there. Okay, she's back. That's cool. I'll come back. You're muted. Try to quickly unmute. Okay.
Sorry about that.
It's okay. It's fine. Okay, so I think one of the things you try to emphasize is the fact that the invoicing system for NGOs are critical when it comes to transactions. So
every organization is critical. There's no way you can effectively have a proper tax. You can't effectively have an organization that is tax compliant if you have not sorted out your accounting, invoicing, and all that system. Is critical to it, and that's why we have accountants with us today to help us see how to put our books in order.
Awesome. So now we have more questions coming in, but I know that we are in very short time, so you have to answer quickly. We keep it to the next time. So, are there any tax laws affecting agricultural ventures, except the one mentioned about the unprocessed food items?
Awesome, thank you. So, agricultural ventures oftentimes are tax exempt. Are tax exempt because the government is working hard to encourage businesses in agriculture. It's highly tax exempt, except for, don't forget, if the agricultural company has employees, you are still subject to personal income tax. If the agricultural company does sales and goods, some VAT. Okay, remember that anytime you're looking at this thing, that's why taxes is the tax law is a technical aspect that you will require guidance. When you're doing business, you have to look at, okay, which one applies to which. Although VAT ideally should apply, you also then look at what is the extent, what's the size of your company. Is my company a big company, or is my turnover up to 25 million? If my turnover is not up to 25 million, then you are free from that. Then the goods I'm dealing with, are they enjoying exemptions? So you must look at the tax issue from different perspectives. You look at it from the perspective of income generally that you are enjoying as a company. You look at it from the perspective of the status of your company. Am I a limited at this company? Am I a small company? Am I a business name? Am I an NGO? You look at it from that perspective. Then you also look at it from the perspective of, are we doing sales and services or goods? Are we buying? Are there transactions that then makes us subject to tax? And even in the midst of that transaction, there are exemptions that we can enjoy. So these are all the dynamics that you have to put together. So for our Greek companies, basically, non-oil, of course, when we talk about exports, basically anything that has to do with non-oil exports, they are free from tax. Non-oil exports are majorly free from taxes.
Okay, so the final question. Do skilled workers like artisan pay tax on their daily payments? What is the percentage? Hold on. And then should the employer withhold the tax or advise them to pay? To whom? Lagos or to federal? Depending on where the person is, right?
Let's take it one by one.
Okay, so let me start
unskilled workers.
Yes. No, skilled workers like artisan.
Okay, skilled workers.
Yes.
Artisans.
Do they pay tax on their daily payments?
Okay, so the first thing is, if we know, when I talked about persons that are taxable persons, and that's that we talked about the informal sector.
Okay.
So for a number of these people, they are not captured within the tax net of Nigeria. We are in a nation that is high, that doesn't have data. We do not have the data of our people, so we can't tell who is who, except you register. You can't tell. Unfortunately, our government needs to do a lot more to capture more people into the tax net in terms of be able to say those who are subject to tax. However, the way Lagos State, I don't know how many other states in Nigeria have been able to do that, the way Lagos State have done and say, oh, I do this. So a skilled worker, an artisan, can simply say, I'm a bricklayer, I want to pay tax. It's usually, instead of monthly, it will be charged annually in a lump sum, but usually small. I'm sure Mr. Iriru will help, Orienru will help us with the detail. The small lump sum that becomes what you use for the entire year. And the Lagos State has so done it very well that most of these skilled workers, and even though they are not within a formal structured company, when they are not within a company that is formal and is structured and they have an employment letter, all those things, you can't charge them a personal income tax. You can't charge, so it will be left to. But what Lagos have done is that if you're going to take any service within Lagos State, then you will be asked to bring your tax clearance. At that point, most of them then go to the tax offices and pay the sum. So you can be, if you're not within a structured formal system, then there may be nothing that makes it mandatory for him to pay until when he needs something from government, and then he has to go. So there is a system that makes them to pay. Artisans, you can, a number of them, for their children to go to public schools, government public schools, you must pay taxes. Yes, Lagos State has done it. Before you can enroll your child in a public secondary school in Lagos State, you must show evidence of tax payments. And remember, if you commit some traffic offense in Lagos as well, you will be required to show your tax clearance. So all these things are the ways Lagos State have tried to ensure that the informal sector is captured. But if you have such artisan within a company that is structured, then the artisan is subject to PITA, personal income tax. So the employee, the employer of that person takes the responsibility for collecting on behalf of government and remitting it. And at that point, you will also be entitled to his tax clearance.
Okay, cool. Thank you very much.
And
okay.
Of course, it is the states. Lagos is the states that takes it, depending on the state of whichever state in Nigeria.
Okay. All right. Thank you very much. I hope that has been answered, Reverend Juliet Benite. And for every other person, if you still have other questions, please just remember the chat room is open, and Barrister Shola Kwadishu will still be here, and we can catch up on such questions and then get the answers much later. But I would like us to, go ahead and a round of applause, go ahead and say thank you very much, Barrister, as we move to our next facilitator. Thank you, Barrister, for your time. All right, so we're moving to the next person. And of course, she's been mentioning Mr. Igori and she's been calling that he's coming up. I'm like, okay, we're looking forward to this, to this exciting, personality that would be taking the next session for this program. And so I'm going to just read a little bit, right, about him. Of course, there's more, and the more he talks about his experience, the more we're going to learn about him. So Mr. Igo Orienru is a certified coach, teacher, and speaker, and is trained by John Maxwell team, the fastest growing team of elite coaches in the world. He is known as a change agent because his pallies and training interventions often bring about immediate changes, long-lasting positive results. This is in line with his personal mission statement, continuous self-improvement to impact others. Well, I'm glad you're here, sir. He's an accounting graduate and a chartered accountant, a fellow of Association of National Accountants of Nigeria. He holds 2 master's degrees, an alumnus of Hegai Institute, Singapore, and a member of several professional bodies, including the Chartered Institute of Taxation of Nigeria, where he is a fellow and was a member of the Governing Council. Presently, he's an assistant director in the Directorate of Tax Audit of Lagos State Internal Revenue Service, Lagos, Nigeria. He's happily married to Nkechi, and family is blessed with 4 children. With a round of applause, I want us to welcome Mr. Igo Orienru. Please go ahead in the chat. Welcome, sir. You're muted.
Thank you.
You're welcome, sir.
Thank you. Good afternoon. I'm happy to be here, and I'm sure you can hear me, so I can go ahead. I must show appreciation to Sholakwe Adeshi. She's actually a learned, yes. Okay, she's a learned person. I am a knowledgeable person. You have made the work so easy for me. So I can just take a bow. I'll quickly run through a few of the things that I'm supposed to discuss, but you've actually touched them, and you touched them so well, so professionally. I appreciate you, Sholakwe. Also, on behalf of my executive chairman, as Amzat Subar, I'm so grateful to be here in this webinar, and I'm sure we will be able to rub minds together as we look at this very, very interesting topic. Let me quickly go to my slides since I have limited time, so that we can see how much we can cover. I also recognize my teacher in the Institute of National Transformation, Sister Juliet, Reverend Juliet Benite. God bless you, ma. All right, I'm sure everyone can see my slide. Okay. So, Shola Kwadeshi, legal webinar, legal awareness webinar. The theme is securing your business in the existing and emerging tax regime. I am to talk to this topic, tax obligations of persons and businesses in Lagos State. My name remains Igo Onyeru. Igo means money, Onyeru means goodwill. All right, I'll quickly go straight to my slides. And I want to start with this very, very interesting quotation by Oliver Wendell Holmes. I hate paying taxes, but I love the civilization it gives me. All right. Then Mark Cuban said, why some people might find it distasteful to pay taxes. I don't. I find it patriotic. I hope you also find it patriotic, because if you don't pay taxes, which is one of the most reliable source of revenue for government, we might just keep suffering. For example, the money we borrowed before I was born, we are still paying with interest, and we have an office called debt management office. People are paid salaries because of the debt, and it's still on and on and on. So let's pay our taxes. Thank you. Learning objectives. At the end of this presentation, we'll be able to define and differentiate tax from other charges, explain PIT business taxes and the duties of employers of labor, be able to discuss the hotel occupancy and restaurant consumption tax. We'll describe how withholding tax is operated. We highlight the remittance process for persons and businesses in Lagos State, and we'll list the local government business levies and permits. All right. By way of introduction, our learned friend has quoted all the laws, but permit me to quote section 24 of the 1999 Constitution of the Federal Republic of Nigeria. It states, it shall be the duty of every citizen to declare his income honestly, to appropriate and lawful agencies, and pay his tax promptly. All right. So failure to pay or failure to comply to this section of the law is an offense that attracts certain penalties. So this presentation will discuss the tax obligations and of persons and businesses in Lagos State, with focus, like I've mentioned in my objective, with focus on PIT business taxes, consumption tax, withholding tax, remittance, and local government business permits. So what is tax? Our learned sisters giving those definitions. So I will only just take what the national tax policy said about it. National tax policy defines tax as any compulsory payment to government imposed by law without direct benefit or return of value or a service, whether it is called tax or not. The key thing there is that it is compulsory payment to government imposed by law without direct benefit. That is, that you pay a tax of 10 million naira does not mean your road must be tarred with 10 million naira. It is actually a pool of commonwealth that is used for the services and provision of amenities to the masses. And the process of collecting this tax is what we know as taxation. Also, Oliver Wendell Holmes made a statement, said taxes are what we pay for a civilized society. So if we want to remain a civilized society, let's pay our taxes. Quickly, these are no taxes, because I see people come to me and say that you've charged me tax again. What happened? The guy committed an offense and he was fined and said it's tax. No. All right. So when you pay fees and charges or rates, they are payment for service, not tax. Fine and penalty, not tax. Donation. All right. If your name is Donatus and you like donating money a lot, that does not mean you are paying taxes. It is a free will or voluntary contribution. All right. Or if Kai confiscates some people's goods, not tax. Rent is not taxed, or we pay for license so that I can get permit to ride your vehicle. fine. If you are trekking with your leg, you will not pay leg tax. So you bought a car and you needed a permit to drive that car. So these are just, these are not taxes. All right, so let's look at PIT business taxes. PIT actually means personal income tax. Before we talk about that, I will quickly highlight the taxes that we in Lagos State Internal Revenue Services collect. Then I will now dive into personal income tax, business taxes, as in the individuals, how they do it right, the sole proprietors or entrepreneurs, partnerships, and the employees. Then I will also talk about the duties of employers of labor under the Personal Income Tax Act. All right. So these are the taxes that we collect in Lagos State Internal Revenue Service as empowered by the Personal Income Tax Act 2011 as amended. The first is personal income tax, that is pay as you earn, or direct assessment for individuals who are not employees. We also collect withholding tax for individuals only, because for corporate bodies, limited liabilities, they go to federal. Collect capital gains tax for individuals, collect stamp duties on instruments executed by individuals, also business premises permit, development permit, then consumption tax on hotels, restaurants, and event centers. So these are the taxes that we collect on behalf of the state. So now let's dive into the personal income tax. First, the individual. When we talk about the individual, we're talking about a self-employed person, maybe running business in his name. This taxpayer could be a single businessman running his business, or is doing a trade. This taxpayer may have some employees working for him, but all transactions are solely in his name. We have many of them, like all these designers, tailors, printers. Most of them, they are individuals. All right, so they pay tax to the State Internal Revenue Service, and in this case, Lagos State Internal Revenue Service. How to do it right? What I always tell them everywhere I go, I have opportunity to speak on this, is keep your records very well. I was even sharing with somebody a few days ago that when you keep your records very well, you realize that allowable expenses are there, and allowable income is there. Before you know it, what you pay as tax becomes very reasonable. So please, the first thing is to keep proper records. All right, income and expenses. Then payment of development levy, that is 100 naira in a year. Then payment of business premises, the premises where he's working. It doesn't mean that I must be the landlord that is already working in the premise. He pays 10,000 naira for the first year of payment, then subsequent years he pays he or she pays 5,000 naira. All right. Then if he has if they are withholding taxes, is to deduct, remit, and file monthly tax returns on withholding taxes, which should be on or before 21st day of every month. All right. So the next thing too is that you should also fill tax form A every year to file in his returns. And the law says that that form A is called income tax form for declaration of income and claims for allowances and reliefs. That must get to the Internal Revenue Service every year within 90 days from beginning of the year. But just to make it easy, we say 31st of March of every year, you have to submit your returns so that we can now look at all the financial information, then do the proper computation, which you call assessment, then you know what tax to pay. Then payment of direct assessment after being served notice of assessment. So what we're saying here is that because an individual, he submits his form A, which shows all his income, expenses, and whatever claims he needs to have. After that, we assess him or we give him notice of assessment. And that notice of assessment makes him to go to the bank to pay. And what he pays, that method of payment is called direct assessment, because we're assessing him directly, not through any other third party. That is for the individual. What about the sole proprietor? Okay, a sole proprietor is an individual who owns and operates his or her own business. This one might be a business name that's properly registered, but it's a business, it's a venture, not a limited liability company. The easiest and most common business to set up is a sole proprietorship, registered business name, or enterprise. As the business owner, you are entitled to all the company's revenue. So what is it supposed to do, right? All right, like I said, the same, almost the same thing with the business owner. Okay, but for him, there are deductions for employees. He will do that and pay payee on a monthly basis. I'll talk about payee later. Then taxes to which the sole proprietor is liable. This is just a table. All right, personal income tax, direct assessment for himself, personal income tax for employees. Those ones go to state internal revenue service. If they are withholding taxes, that's third-party transaction or chargeable items, applicable with withholding tax rates are applied. If it is individual, that is, if it's paying on behalf of an individual to state, if it's on behalf of a limited liability company to FIRS. Same goes for stamp duties. Stamp dutiable, that is dutiable transaction documents that the sole proprietor is involved in, that goes to LRS, and also capital gains on assets, gains on any asset that the sole proprietor has maybe sold, yes. It's also 10%, it goes to LRS. Now, partnership. All right, so you know, partnership is a business when two or more persons jointly organize business together based on defined terms. Like the sole proprietor, partnership do not pay companies income tax also. Why the income of the partnership is not taxable? The income of the partners in the partnership are taxable. That is, the partnership do not pay tax, but at the end of every accounting year, they share profits. So when they share profit, the individual partners in that partnership will not pay tax on the income that they got as their share of profit. So income of partners come in form of salaries, interest and loans, share on appropriated profit and drawings. All right, so the following taxes are applicable to partners of partnership. All right, personal income tax, that's for the partners. Personal income tax, other employees who might be working in a partnership. And same goes for withholding tax, stamp duty, and capital gains tax. All right, so we have the next, which is the employee himself. All right, so at the beginning of the year, each employee is to fill tax from A, just like the individual too that runs his own business. You fill the tax from A, but this time you submit it through your employer. And I'm happy to let you know that all of this now, if you're in Lagos State, you can actually access it through our e-tax platform, and you can fill it online. All right, approved computed tax is by the employer. Approved computed tax is by the employer from employee's remuneration, because the employer has all those details. So it does that and submits to the tax authority. Then the employer is an implied agent that collects the tax on behalf of the tax authority by on monthly basis, deducts what is due to the government from the employer and remits it not later than 10th of the following month for the taxes that are deducted the previous month. All right, so what are the duties of this employer of labor to employees or in terms of tax? The first thing is that every employer of labor needs to register. Okay, then I'll talk a bit more about payee, then direct assessment. So every employer of labor, please take note of this. You need to register, and these are the requirements. All right. So you approach the closest internal revenue service to you. We have 40 of them scattered all over Lagos, or you can go to our website and you can get more direction. So you have to write a letter of application to register, and you attach to that letter a copy of certificate of incorporation, whether limited liability or not, because you are registering for your employees or company of registering a business name. Then you also attach a copy of your memorandum of article of association if it's a limited liability company, copy of payrolls, kind of on a spreadsheet showing salaries, allowances, and other perquisites for employees, evidence of directors' tax payment, because directors should be tax compliant before you start talking about employees. Evidence of payment of business premises levy, evidence of payment of development levy. Then if it is a rented apartment, a copy of the lease agreement or rent receipt to show that you are actually a legal occupant of that premises. And take note, all enterprises and companies are required to register for payee scheme within 6 months upon commencement of business. All right. So payee, I won't talk much about that. I've been mentioning it. It simply means pay as you earn. So you will have the section of the personal income tax that supports that section 81. So the amount of tax that is due the government is deducted by the employer and remitted to the relevant tax authority. Section 82 of the Personal Income Tax Act provides that where a taxable person fails to deduct and remit the appropriate tax to the relevant tax authority, such employer would be required to pay that sum plus a penalty of 10% and interest at the prevailing commercial rate. So employers of labor, don't even get yourself into that web. So as you deduct, remit as and when due, so that the penalty and interest should not be your headache. Then the next is the direct assessment, which I've mentioned before for individuals. Other incomes that accrue to the entrepreneur by virtue of the business other than salaries, they are taxable on direct assessment. And that will be on preceding year basis. So that is done once in a year. So whatever he has made, maybe in terms of gains from other sources apart from salary, and gains from the business, will pay it. What he made for 2021 will be paid in 2022. So said examples include income by profit from trade, personal drawings, directors' fees. Yeah, so we'll move forward. Now let's talk about which is very, very interesting. I heard my learned friend talks about I will get those details from a legal department, but I would like to make it very clear that we are not operating anything illegal, because the last judgment, the last case that we had against us was fiscalization. There was we automated the process and agreed that the automated machine should be fixed on fixed in different hotels that are paying the tax, but LRS was bad not to use that machine. But that since 2009 that the law came into being, there have not been any court case buying us from collecting it. Sholakwe, I have sent a message to our legal department. All those details I will send to you. You know, you guys are learned people. We are only knowledgeable people. All right. So let me quickly dive into what we have under this. We're going to define the hotel occupancy and restaurant consumption tax. We'll look at mode of operation, look at obligation of collecting agents, and then do the right thing and penalties if there are any default. Okay. All right. So the hotel occupancy and restaurant consumption, otherwise known as HOR tax, all right, it's a tax levied on goods and services consumed in hotels. All right, just in hotels, services, apartments, meeting rooms, function halls, hotel facilities, restaurants, or event centers. The law took effect from June 22, 2009. HRC tax rate is 5% on value of goods and services consumed in hotels, restaurants, service apartments, meeting rooms, function halls, hotel facilities, or event centers. Business owners act as collecting agents to LRS on behalf of Lagos State government. And HORC tax is not charged on income of the business, but only on consumables. That is, the tax burden is borne by the consumer and not by the collecting agent. How it operates: the law automatically appoints a collecting agent, all right, as any person owning, managing, or controlling any business or supplying any goods or services in hotels, service apartments, meeting rooms, function halls, restaurants, hotels, facilities, or event centers. Also, supplying goods or services in supermarkets, food court, food station, or deli, that is delicatessen, all those aspects in supermarkets where frozen foods are sold, or supplying goods and services in malls or and confectionaries with or without seating facility, and whether or not that is located in an hotel or not, as long as it is, it talks about confectionaries, food items, and the like. So all collecting agents are mandated by the law to comply with the provision of the Hotel Occupancy and Restaurant Consumption Law. What are the obligations of the collecting agents? The first I'll mention is what we call the three arrows of the law: registration, remittance, and returns. You have to register your facility and your business that you are doing, then remittance of all the HORC taxes collected. Also, every collecting agent is required to keep, maintain, and preserve such records, books, and accounts in respect of all transactions chargeable under the law. Agents are required to remit amounts collected to LRS on or before 20th day of each month, of each calendar month, to a designated account of the government, and at the same time filing a return. HORC tax filing is a report stating the total amount of payment made for all chargeable transactions during the reporting period, the amount of tax collected by the agent during the reporting period. Also state any other information that is required by LRS to be included in the report. So doing it right, we're saying that for the purpose of this provision, each calendar month reporting period and the taxes imposed and collected under the tax law are due 20th of every month. I've mentioned that. Therefore, do deduct the tax if you fall within that business sphere as required by the law. Remit full amount deducted not later than 20th day of the month following. All right, so that is about doing it right. Now talk a bit about penalties. All taxes that are not remitted to the designated account of the government within the time allowed shall, in addition to other penalties prescribed by the law, bear interest at the rate of 5% per annum above the prevailing central bank minimum rate discount rate as determined at the time of actual remittance. If a collecting agent fails to file a report and remit taxes, the goods and services collected within the time allowed by Section 626, subsection 2 of this HRC law, the agent shall, in addition to interest payable under Section 10 of the law, pay penalty of 10% of the amount of tax due. So those are just brief on hotel occupancy and restaurant consumption tax law. Now I talk about withholding tax. Okay, our learned friend also mentioned it. Withholding tax is a deduction at source from payment made to a taxable person or company in respect of income derivable. All right, it's not another form of tax. It just simply means it's just simply a means of collection. That is like a kind of advance payment of tax that you can use to offset your tax liability at the end when you file in your tax returns. All right, withholding tax due to LRS are on transactions that relate to individuals, sole proprietors, and partnership. That the partners in the partnership. Withholding tax are charged at 5%, except for withholding tax on dividends, directors' fees, interest rates, and rent, which are chargeable at 10%. Withholding tax on interest and dividend are referred to as franked investment income, to which no further tax is charged on the income to which the tax was charged. What are the responsibilities of business owners for withholding tax deduction and remittance? Just like with big corporations, enterprises are required to remit taxes that were deducted as source to the relevant tax authority. Penalties for non-deduction and late remittance of withholding tax within 30 days, that by the 30th of each month, are these sections 74 of personal income tax are made it very clear. He said, any person or body corporate who, being obliged to deduct tax, fails to deduct, or having deducted, fails to remit such deductions to the relevant tax authority within 30 days from the date the amount was deducted or the time the duty to deduct arose, shall be liable to a penalty of an amount of 10% of the tax not deducted or remitted, in addition to the amount of tax not deducted or remitted, plus interest at the prevailing monetary rate of CBN. So to avoid all this long legal grammar, once you deduct, remit as at the time due. All right. So I go to talk about remittance process of persons and businesses in Lagos State. I'll first talk about the monthly deduction and remittance, which is by 10th of each month. That is for those companies that are operating pay on behalf of their payee, on behalf of their employees. Paragraph 7 of the paragraph 7 made it very clear that remittance of tax deducted. I'm quoting the operation of personal income tax regulations. And it says that within 10 days of the end of every month, an employer shall pay to the nearest tax office or to any bank as may be prescribed or designated by the relevant tax authority, all tax deducted under this regulation. The tax officer shall give the employer a receipt on the prescribed form for the total amount. This time around, it's the bank that will give you a receipt, because you pay to the bank. We have a cashless policy. No staff of LRS is permitted to collect cash for any transaction. Everything goes to the bank. Paragraph 8 of this same regulation talked about demand for remittance of tax. If after 10 days of the end of any month, an employer fails to remit tax to the tax officer or to any bank designated for such payment, the collector of taxes shall demand for immediate remittance of the tax due. All right. Then filing of annual tax returns by 31st of January. Section 81 of Personal Income Tax Act as amended stated that every employer shall be required to file a return within the relevant tax authority with the relevant tax authority of all emolument paid to its employees no later than 31st of January of every year in respect of all employee in its employment in the preceding year. That is all the payment that was made, monthly payment that was made to the employees for the year 2021, January to December 2021. There is a form from H1 that is completed and submitted by all employers of labor to the tax authority not later than 31st of January. Any employer who contravenes the provisions of this section shall be liable on conviction to a penalty of 500,000 in case of a corporate body and 50,000 in case of an individual. What are the penalties? Section 82 provides that where such person fails to deduct and remit the appropriate tax, the relevant authority, the employer would be required to pay the sum plus a penalty of 10% and interest at prevailing commercial rate. Then section 76 stipulates that in addition to the penalty of 10% for late remittance, the provision of the Act relating to recovery and collection of tax shall apply to recovery and collection of that sum. This is the Form A that I've been mentioning, all right? But like I said, it's not automated. It's called Income Tax Form for Return of Income and Claims for Allowances and Relief. So individuals fill this, employees fill it, those who are self-employed fill it, those who are running their businesses, they fill it and they submit, all right? This to be completed and submitted by individuals and employees, and deadline for submission of this is 31st of March every year. All right, now I think this is the last point I'm going to talk about: local government business levies and permits. All right. I don't know how many people are aware of this Lagos State Codification of Taxes, Levies, Rates, and Charges Regulation 2020. It is to help ameliorate some of the harassments most of our taxpayers do get. And also, I will still talk to it. Let me refer to this other gadget that is scheduled to the Taxes and Levies Approved List for Collection Act of 2004, as revised by the Federal Gazette number 77 of July 2015. Now, this Gazette listed, okay, so sorry, before I move on, like I said, local governments, they don't collect taxes, they only collect levies and charges. Now, the Gazette, this Gazette, that is the schedule to the Taxes and Levies Approved List for Collection Act of 2004 as revised by the Federal Gazette number 77 of June 25, listed 25 items. It sounds big, isn't it? But not all of them are relevant to you, all right? Even if you are doing your business local government area, if you don't have a shop and a kiosk, you will not pay shop and kiosk rate. Also, if you are not into wine, liquor, you will not pay that. If you are not into slab, like all this slaughter, all right, marriage, birth, and death registration, only for those who are doing that. If you want to naming of street, you want to be you are a big man, you want to name streets, then you now get yourself occupied. So it is not that everybody pays these 21 levies and taxes. Only some of them that are relevant to you that you pay. But I'll quickly go to talk about this rate, which is inside that Lagos State Act. All right, so these are the approved rates. But I am careful to say that a lot of us are ignorant of it, and some unscrupulous elements still come and just charge us some rates that are not expected. You'll see this in that document that I just quoted, all right? And in that document, you have category A, if you are living in highly urbanized communities, category, that's A plus, or highly urbanized, category A, urban communities, category B, semi-urban, category C, rural communities, and the rates that are there. I have an example. I know my time is up, but I have a quick example I want to tell. I have a sister who runs a school, and there was a day they just came to her, local government guys, you must pay your tax. We are going to lock up this place. Da, 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 blah, 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 blah. So she was a little bit scared. And she now remembered that I have a bros that works in the tax authority. So she called me and said, bros, your people are here. And not mentioned. I said, they are not people, they are local government. But anyway, meanwhile, they've already told her, they've already slammed her a bill of 50,000 naira, and they were harassing her, even trying to give her a number to pay, all of that. So when she called me, and I told her in the first place she will pay, but let me talk with them. So I introduced myself. With that, the guy's voice started coming down. And I said, but you know there's an approved rate. And based on the approved rate and where this place is located, what is this person supposed to pay? What the person supposed to pay was 10,000. And it was already saying 50,000. And was harassing that he was going to lock up the person. And I told the person, did you say you're going to lock them up? So, no, I didn't say so, I didn't say so. And did you give them the government account with the code account number to pay to? If not, they would have just given one funny account number. And so please, I will appeal to everyone, get to work with these rates, and it will help reduce some of those harassments. And like I said, everything is inside this Lagos State Codification of Taxes, Levies, Rates, and Charges Regulation 2020. We even have it in our website, all right? Page 12 and 13 on this code, you see all those charges. And this, if you look at this, we have it in our website, and I've put the link there. Please get it downloaded. I even have a copy of it that I use often, but it is important we get it. It will help us a lot. I don't know whether other states have it like that here. So that is what I want to say about the approved rate charges Lagos of local government. All right, so let me start winding up. So I need to say a few things about us and what we expect from you as a taxpayer. All right, your obligations, like I said, register your payee. Then if you have non-executive directors that are not on your payroll, then you should make sure that those ones, they pay under direct assessment. Every remittance for payee must get to us 10th of the next month. Withholding tax, 31st. Withholding tax are also deducted and paid within that month, 30th of that month. Then business entity to file in annual returns, not later than 31st of every year. Then business premises to be paid by the company, 10,000 first, then 5,000 every other year. Then development levy, 100 naira per person in a year. Like I said, non-executive directors, like every other taxpayer, including individual employees, are exempted to file annual tax, are expected to file annual returns from A, which you can do online, on income from all sources. All right, include that of the director's fees. That should be submitted not later than 31st of March. All right, so these are just it. Make sure you do the right thing. Also, it is good to process tax card for your employees so that they can also know that, yes, what they are paying for, it is recorded. Upload your schedules and your payees online. You can do all of that going to our e-tax platform. All right, so I want to stop here. So a quick recap. These are the things we said we are going to discuss, and I touched them briefly. I'm sure the recordings or maybe the slides, according to whatever the organizers want to do, will get to you. Okay. I'm available at all times. Okay, so let me just conclude by saying, do a holistic tax check, take tax compliance seriously, invest in record keeping as one of the important obligations under the tax laws. Take an informed decision on what you want to do, either to do the needful or risk prosecution. Please choose to comply. And finally, Franklin D. Roosevelt said, taxes, after all, are dues that we pay for the privileges of membership in an organized society. So thank you for your time, and God bless you.
Thank you very much. I'm so grateful. Thank you so much,
Thank
sir.
you.
So you have a lot of questions, and I'm so sure you're ready. I wanted to try.
Sholakwe is learned. I am only knowledgeable. Sholakwe is ready.
I can assure you that these questions, you will answer them well. So I'm going to start from the first person.
I have my bulletproof. I have my bulletproof on. Yes, ma'am.
All right. So the person said, the exemptions you talk about, do they apply to companies whose profit turnover is less than 25 million?
Good questions. Yes.
So let me finish the question. Let me finish the question, because it's two, so that you can just quickly. So does it apply? Then the second one is, how does now the company apply for the exemption?
Okay.
Okay,
fine.
So that's it to start. All right.
Now, for companies that are under 25 million, you are exempted from paying tax. So you don't need to compute whether you make profit or not, but you will pay your payee. That is every salary you receive, that is the income that accrued to that business owner, you will pay tax on that.
But then yes, but how, so the next question is, how does the company now apply for the exemption to say, okay, we are not liable to be able to pay this tax because our company runs turnover of less than 25 million?
It is, you have to show the evidence. I emphasize that record keeping is key. You don't come and tell us with your mouth. Meanwhile, you are telling us with your mouth, your office is having over 40 staff. You are driving the latest expensive car in the world. You live in Banana Island and you are a Muslim, you travel to Hajj every Friday, and you go to, if you're a Christian, you go to Jerusalem to pray every Sunday, and you're saying that you are under 25 million. Auntie, will not take down one. No. Show us your records, your business record, that we show that, yes, your sales turnover is not up to that. With other evidences, then we are ready to work.
Okay. So
yes,
as you mentioned, record keeping, so critical. Okay, so there was another question that came in about the event center when we were talking about the hotel occupancy. All right, so the person asked saying, so if I have an event center and I have there's a party going on, so I have to value all the food the guest brings in for the celebration and then tax them on it?
No.
Okay.
What they paid for, and you have receipt on it, that is what you charge 5% on. Do you get? So you don't need to now begin to like value what they brought in. Did they pay for it? And there's transaction between you and them, and there's a receipt issued, because record keeping is also very, very key. Yeah. So once there's a receipt for that. Okay, that is what you charge for. So so we will not use a sledgehammer to kill a fly. They brought in food and you now begin to validate. If you want to do all of that, I don't think it covers that area.
Okay, so the basic thing is that they pay for the event center and then you tax them on that. Is that the way it
Yes.
works? Okay.
Yes.
Okay.
If you also supply drinks
Okay.
and food and they paid for that, also they pay. There's also that 5% on that.
5% on it. Okay. So another question tries you know, a little bit a clarification when it comes to the withholding tax, right? And the question here says that withholding tax is an advance payment that can be used to offset tax liabilities.
Yeah.
So how can you just make that a little bit clearer, for us to really know how to take that?
Thank you, Auntie Buki. I like the way you spell your own. All right. Now I need to really sound this as good advice. A lot of people, especially contractors, they supply goods. The payer did not pay the whole amount. They say there's withholding tax. You, the contractor, you should go back to that supply, that person you supplied and said, Madam, maybe you deducted withholding tax from me. Can I get my withholding tax receipt? Until some things happen in Nigeria. Sometimes they even will deduct that withholding tax. They don't send it to us, so they will not use camera and the camera will break leg on the road. So you, the contractor, it is your right. Go back to that person. Auntie, uncle, where is my withholding tax receipt? Because that withholding tax will be remitted by the person who paid it in the name of the contractor that supplied the goods, not the name of the person that paid. So I am the contractor. I come, I now ask for my receipt. So the person that I supplied will give me that receipt. So I keep that receipt. So let's say, for example, all my withholding tax receipts or withholding tax notes for the year in question amounted to 300,000. At the end of the year, if the tax liability that is computed by the relevant tax authority is 800,000, and I submit my credit notes, there will be deduction of 300,000 because that is already an advance payment. So what is left to pay is 500,000. But if you don't have your credit notes to show that withholding tax was paid before by you on your behalf by the people you supplied goods, there's nothing we can do, man.
It means,
I hope I'm clear on that.
Okay, it means that if we do not get that, person would have to pay that withholding tax themselves.
There's no evidence to show there was any deduction, any advance pay.
Okay. Laws particular to punishment for misuse or mismanagement of taxes by government officials in terms of managing tax forms.
Oh, very interesting. As at this time I'm speaking, I've not seen any, but we can with this forum begin to push that, and if it goes through, that will be very interesting.
Okay.
But right now there is no law that the government will be called upon and be punished for not using it well. But there's one thing I know, which I think it is World Bank that has been pushing it. They call it tax for profit. Is it tax for profit? Yes. It is a kind of advocacy. So we belong to a community. We know that we pay so much tax. We can actually approach the government, not we now, we are just agents, and say that we have been paying so amount of tax. We expect some reasonable contribution from you in terms of that. So they can demand for it in a software, not that is going to carry placard and all of that. So, and the government authorities in a way to also take time to see that they listen to them and they sit down and say, okay, fine, we're going to see what we can do in terms of this road, in terms of security, in terms of that. So it is an advocacy thing, and it is a kind of discussion between the authorities, all right, and the community, not on individual basis. But any specific law, for now, I'm not aware of that, ma'am. Oh, yes, Sholakwe want to help me. See, that is why I'm happy that you are my learned friend.
Okay, Barrister, please go ahead.
I wish I can help you on that.
Okay, go ahead, ma'am.
Can you hear me?
Yes, yes.
Yes, I can hear you, ma'am.
Okay, so what I want to know is that, is there any law that binds officials within the NIRS or federal RS that do anything fraudulent to take tax from citizens? Or are there laws within that puts the people under control? Because we see some of the officials of the agency taking advantage of citizens' ignorance.
Anyway, okay, thank you. I always jokingly say this when they bring it up, that Jesus Christ with all his anointing had 12 disciples, and one was a Judas. 12 employees, so only 12 employees. So are you with me? And with all his anointing, one was a Judas. So we have over 3,000 employees. Divide by 12, you can see that there might be more Judases. All right. But on a serious note, now we have a very strong policy against abuse of office and abuse of any employee, any taxpayer. Once you get to our notice, especially there's clear evidence you collected bribe or you collected money, it is summary dismissal. And we've had several cases like that. So you should cry out, bring such people, because they are painting us black. Well, not all of us are bad. Like I said, just few Judases. Report the case. You go to our website, you can chat directly. We have our call centers. You can call and you can report any case. And I'll assure you, once anyone is caught, we don't take it lightly. That's what I'll say from my own end. Yeah.
Okay, thank you very much, sir. We have a few minutes to go because we need to take the next facilitator, but we still have some few questions. As per tax certificate, it is always difficult to get the cert online. What do we do?
For tax certificate, are you talking about withholding tax? Or are you talking about receipt for payment? They are two different things. For receipt of payment, it is the bank where you pay that.
She said payee.
For payee.
Yes.
All right. If you upload everything online and you are not able to get it, there is always a reporting station that you will report to. I will advise that you just get to the reporting station and pick it up so that they can help get back to our IT to resolve it. But to a large extent with our e-tax, although we're still working on it, you can actually, once you do your payment, you can actually download. But when you have such cases, just escalate either through our call center or to the nearest tax station with the evidences of the payments you've made, and we'll get it resolved immediately.
Okay. Reverend Juliet Benite has a question for you. So please go ahead, ma, and unmute yourself.
That is my teacher.
Good afternoon. Thank you so much, Mr. Aurelio, and Barrister Sholakwe and our amiable moderator. I'm sorry, this question, I couldn't just type it. You know, sometimes the grammar, the plenty.
Go ahead, ma.
My concern is, for example, an organization like mine or with my husband, where we don't really have employees, permanent employee, maybe just one, but most of them are contractual, meaning that they are skilled artisans, they work per space, work per contract obtained. That I believe that is not included in the what do they call it, the payee. That means the employers, they are not full employers. But do we, probably this also goes to Barrister, is it important that even as they come on board for a particular contract specifically per time. There's a contract signed and what is payable to them because of bookkeeping. At the end of the day, how do we put this together? And in conclusion, to say that this discussion is critical. I don't know, can you hear me? I was interrupted.
Yes,
yes.
we
Coming
lost you
from
at
my
the time.
own
You said the
perspective as a
discussion
Christian.
is.
Yes, I mean, something was said today that really caught my attention. If you're not paying your tax, it is criminal. So that our crimes don't get increased, we need to know what we need to do and put our house in order. Thank you very much, sir.
Is Barrister Sholakwe taking it, or I talk to it first?
You would talk to it first, sir.
Okay, all right. Thank you, Reverend J. For the skilled staff, once there's a contract and it's going to run for some months, it is good for them to get to compute their taxes and educate them to pay, because they don't really pay much. I'm sure you know that with the Finance Act 2020, any skilled staff whose total income in a month is overall income is 30,000 is tax exempt. That one is not paying tax at all. That is minimum wage. Now, for those that are above, maybe 40,000, 50,000, maybe what they will pay in a month cannot be more than maybe 250, 500 naira. Hardly can, I can't see anyone paying maybe more than 1,000 naira. But what I'm saying is that educate them, then let them process the tax card. Of course, you are my big aunt now. We can easily make sure we get that. Because one thing I'm saying, once any artisan gets that tax card, they feel very happy. Because whether your tax is only 300 naira or 1,000 or 1 million, you process your tax card, you carry the same card with everybody. So they give them a lot of sense of belonging. So even for 3 months, for 4 months, for good record, it is good for them to just get it through, because especially some of them, their children go to government schools. When schools are resuming in September, October, they always ask them to go pay. And some of them, they run to quack, they will go pay to somebody wrongly, and they'll bring fake receipt. By the time they verify with us, if you speak, they go and pay twice again. So for the artisans, long as they are for like over a month, just we can get their tax processes properly recorded and tax card given to them. Then for you and your husband, like I said, you fill your Form A, and with your records, it's only on direct assessment once in a month that you pay, once in a year that you pay, unless if you are on payroll and it's on a regular basis. I think that is what I want to say on that. So where I do not get it through, and my barrister and learned friend is there.
Okay, thank you, sir. I think you majorly dealt with the issue. However, I would like to I would like to also advise that such cases, when you are dealing with skilled workers and they are not your full employees, what you could do is that your terms of contract or arrangement with them, you can insist that they have tax card as part of the clauses for taking them on, so that you're not working with people that are not registered. The moment they know that they have to present a tax card before they can get contracts from your company, and what you're giving them is valuable, they will go ahead and do it. Besides, I like the fact that Mr. Herrera has helped us today, because if you look at it truly, what they get to pay is not something so much. Below 30, you are not subject to tax. Above 30 is is small. And it's something that if they quickly start taking the steps, an annual thing, they are not going to have any issue. So you can make it as a term of the contract before you start with them. That's just what I want to add.
Thank you very much. That's simplified, and thank you both of you.
Okay.
It's important. Thank you.
Okay, so we still have two other facilitators, but we still have two questions, and I don't want anyone to feel like we didn't catch your question. So I'm going to go to Uzoichi's question, because it's different from the previous ones. And she asks that what happens when the LIRS refuses to accept your returns and keeps insisting you pay more even after swearing an affidavit. And she
Fantastic.
emphasized that this question is for a direct assessment.
Okay. Okay, Uzechi, you are my wife is an Igbo woman, so I'm talking to you as my in-law and also talk to you as a tax person. All right. So this one is not, I hope it's not recorded. Now, the first thing is that once you have your evidence and you're given an assessment, and you know clearly, the law states clearly that once you're given an assessment, you have 60 days window to make payment. But within that 60 days window, if you do not agree with it, within the first 30 days, come forward with your position that I do not agree with this. And we can only listen to you where you now tell us what you agree with. That is what we call the undisputed. Okay, so you are assessed 2 million. And you said, no, from my records, which I have before me, what I know I am entitled to pay is 750,000 naira. And this is my 750,000 naira, undisputed. You pay that and you put all your documents in place. It is acknowledged. If they insist again, you know, they said that you lawyer said that if that comes to equity must come with clean hands. If they insist, you ask them to come and investigate the books. And if they keep, if they still insist and you feel you have strong ground, that is where I'm advising as my sister. You have the tax appeal tribunal to move on to. Yes, I won't talk more than that.
Okay.
Thank you.
All right. So on a final note,
am I okay with you, my in-law?
Yes and no. Yes and no. Because
no.
The problem, I know it's personal to me, and I appreciate that this is a platform for more than just me. I've been on this battle with Lagos State.
I can talk with you
Please.
Offline. I'll give you my number now. Yes.
Thank you very much.
No
I'll
problem.
appreciate that. Thank
you.
Jesus
loves you.
Yes, he does.
I'm chatting you. I'm giving you my number now. Okay.
Please go ahead. Thank you so much, sir. I appreciate that. So at least that helps to clarify that. Yetunde Ola, I would have to send your question to Mr. Orienru, and then he can answer that, and then I can share that with you, so that we can move to the next facilitator, because I know we're really running out of time. So please bear with me on that question. But then there was just a final question of asking if you have a town hall meeting, is this something that you guys you can do, sir? Can you hear me, sir?
Yes. Thank you so much. We used to do that on a yearly basis, but for a while now, the government does what we call village meeting. Okay. But what we do is now focusing on the informal sector, because that's where we have the bulk of the unenlightened taxpayers. So we have the tax education and enlightenment team that moves around to those clusters where you have those people, those traders in the market or in the association, and we enlighten them on a regular basis. We have even gone a bit further now. We have automated their tax payment, whereby they can pay weekly, they can pay monthly, and we're using the presumptive tax system. But generally, for a while now, we've not done that. We've not done that of the kind of village square meeting, but we do the enlightenment on a regular basis, especially for the informal sector. Yeah.
Okay, cool. All right. So I'm glad. Thank you so much for that. Great enough, Mr. Riera shared his number on the chat platform, so of course we can reach out to him, honoring him. Okay, but I will try to get as much as I can for you, and I'll get the answers to everyone who already has any other questions. But please, with a very lovely round of applause, let us thank Mr. Riera for taking his time and for enlightening us and for pouring out his heart, and for please go ahead in the chat and let us thank you very much. We're very grateful. Thank you for your time.
Thank you.
All right, we're so grateful. All right, so I'll be moving straight to the third facilitator. And I know we have, we really have a short time, so bear with us, but we're going to still keep to time and finish at the time we agreed. Our next facilitator will be talking to us on the impact of accounting records or tax liability. I like the way the topics have gone, so we can narrow down, into the nitty-gritties to help us really address this topic of taxation. And our facilitator is Temitayo Oguntade, and she's a chartered accountant with versatile experience in various sectors. She has practical experience in areas such as assurance, financial reporting, taxation, management accounting and budgeting, internal control, business process audit, risk and compliance, with a sound knowledge of international financial reporting standards and Nigeria tax laws. So she's, equipped to be able to really enlighten us today. She's worked with PricewaterhouseCoopers, Nigeria, where she was involved in various engagements in the assurance practice in various sectors such as manufacturing, telecommunications, trading, logistics, and media. She also worked with AO&A audits, specializing in statutory audits, taxation, financial reporting, due diligence, and investigation engagements. She currently oversees the finance function at Accurate Petroleum Limited. I hope I got that right. Please, with a round of applause, let us welcome Temitayo Oguntade. Thanks together. Thank you very much, Ma. The floor is yours.
Good afternoon, everyone.
Afternoon.
Yeah, thank you, Mr. Igo, for that session. Thank you, Barrister Sholakbe, as well, for laying that foundation. I hope you can all hear me.
Yes, ma'am. Yes. Yes.
Okay. So quickly, I would share my slides. Okay. All right. So I'll be talking on impact of accounting records on tax liability. All we've been talking about, the first two sessions, basically all those taxes, the basis are the accounting records. So like the last question that in the last session we had, where there's dispute on, okay, this is how much you should pay or you should not pay and all that. What's one of the major things that would probably resolve that are accounting records, and that's what we'll be looking at what's the impact the accounting record will have on tax liability. So that's what we'll be looking at in this particular session, and these are the items under the table of content. So let's start with what are accounting records. When we talk about accounting records, we've been talking about it, keeping your records and all that. So what exactly do we mean? So they are records that show details of an entity's assets, liabilities, their income and expenditure. So everything the organization owns, everything that goes on the organization, the liabilities, their sales, their expenses, all those things, their trial balance, their general ledger, their bank statements, all those things are accounting records. And they are all the documentation and books that are involved in the preparation of financial statements, or they are also relevant for audit and financial reviews. When Mr. Igo was answering that question the other time, he mentioned that they could come in for investigation. So when tax authorities come in for investigation, part of what they look at are the accounting records. And that's why it's very important that such records are kept properly and adequately. They are the original source documents, transactions, they are always source documents for transactions. You have your sales invoices, you could have contracts, you have agreements, you have your rent agreement, technical agreement, and so on. So accounting records are they are the records of a firm's financial transactions, and it also shows the current financial position. Our journal entries, then we have the general ledger. Then that one sums up to the trial balance. From the trial balance, then we get the financial statements, which is our income statement, balance sheet, statement of cash flow, and all that. They are all from the accounting records. And those financial statements are usually what we use to, like for example, the company income tax and others. Those are they form the basis for the tax computations. So accounting records are any type of documentation relating to financial performance of the company, and they can be used to analyze financial performance or as evidence in case of an audit. So as business owners, it's very important that we don't just take this lightly at all, because at some point in our businesses, we might have those kind of disputes. Like, the final answer I gave was that if they come in for investigation, they check all the records and they still not, they are not satisfied, then you might want to go ahead to the tax appeal tribunal. And if you are going to go there, definitely you must go with clean hands. You want to ensure that your books are properly kept. It's not a place you go to and you have a lot of things that are not tidy. So that's why you have to keep your records properly, so that you can substantiate whatever returns you are filing. You are able to substantiate it to the last. It's very important. So accounting records support the production of financial statements, and they can be in physical form or electronic formats. And businesses are expected to maintain proper accounting records, and there are financial penalties if such records are not kept and regularly updated. We've talked about all those different taxes and the penalties already. So keeping accounting records entails that you set up adequate records in the first place, you maintain them throughout the year, and you retain them for as long as necessary. So it's not that we say, okay, 2021 is gone and I can discard any receipt or document that relate to 2021. They have to be kept, they have to be retained. So there's still a portion that talks about retention, document retention as well. So when we talk about tax liability, what are we talking about? Tax liability is the payment that is owed by an individual or a business or other entity to a federal, a state, or a local tax authority. So it's the amount of money that is payable that you are liable to pay to the government. And in general, a tax liability is incurred when income is earned and when income is generated by sale of an investment or other assets. So it is possible for businesses that, for example, you don't have any income tax liability if probably you are exempted and all that. It's true, it's from your records that we will know that you are exempted. That was mentioned in last session. So you don't just go to tax office and say, oh, my turnover is not up to 25 million. You have to be able to prove it. So that shows the impact that accounting record actually has on your tax liability. If you are not able to substantiate a lot of things, you might not have any choice. You will have to pay. You have to go through all that stress of back and forth, and eventually you have to pay. So don't feel, oh, this document is not important. As much as possible, we must ensure that as business owners, everything that relates with the operations of that business, it is properly kept as required. Then, what are the common tax liabilities? We've talked about that earlier: income tax, value-added tax, withholding, capital gains, payee, education tax. So both individuals and businesses, you can lower their tax liabilities by claiming deductions, exemptions, and tax credits. And then part of what will make one to be able to qualify for this is actually the proper accounting records that are maintained. For example, you have the capital allowances, you have loss reliefs, for example, maybe in a year where you make losses and all that. You don't just, all those things, for you to be able to claim them, there should be proper records that are kept to be able to say, okay, truly, your business qualifies for this kind of relief. So failing to pay a tax liability can result in back taxes. It can result in tax lien. I've heard of cases where some people will say, oh, FIRS actually blocked our accounts they have funds in the account, but they could not access it because maybe they are owing taxes. They are owing taxes, and maybe FIRS has been sending them letters. They've not come forward to go and resolve the issues, and eventually they had to block that account, and maybe to push them to come forward. Then failing to pay tax can result in fine penalties. By the time you are paying, it's assumed that that money that you did not pay to the government on time, so you have used that money to trade. So you are paying interest on it. Then you are also going to be penalized for not doing the needful as when it was required. So failing to pay your tax liabilities will result to all this. So if you can't, another issue is tax. The tax authorities too. They also know how business runs and all that. So at times they are considerate. There are times where you are not able to, you don't have the cash flow to pay all your tax liabilities at once. You could actually go to them and have that conversation, and you could discuss how you are going to split it. I think FIRS allows up to like three installments. So if you can't pay your taxes due to cash flow constraints, you might be able to work out a payment arrangement with the relevant tax authorities. So that's also possible. So when we want to, the next section is the relationship between accounting records and tax liability. So accounting records basically forms the basis on which we now have tax liability. Accounting records are necessary to determine a business tax liability, as well as act as proof if the tax authority audits the entity. It acts as proof. So they are used to make tax calculations. So all the taxes we've been talking about in the previous sessions, they don't just come up with one figure and say go and pay. No, there's a basis, and that base is the accounting records of the organization. So it forms the basis for the computation of tax liabilities. So proper and organized accounting records will help to track the relevant tax liabilities that the company is meant to pay. For example, if as a business owner you've transacted with a number of people, they've supplied you, and you've deducted withholding taxes throughout the month. So by the end of the month, you should know that, okay, the total withholding tax I've deducted, both LIRS, both the state and the federal, is okay, 100,000. So when you have those records properly kept, you know that, okay, this is my total liability. These funds are with me. I'm meant to remit it. So what will help you with that is the accounting records you are keeping. If you don't have that kind of record in place, where you can see it at a glance, where you can actually see how everything, all the transactions at a glance, you might miss it, you might omit some if the records are not tidy. And eventually it might result to, by the time you omit, and you have to pay later, it might result to penalties and fines as discussed earlier. So proper accounting records will help businesses to enjoy relevant tax claims. So, and capital allowances, loss reliefs, investment allowance, including exemptions. So when you say, oh, I'm not up to my business, I'm less than 25 million turnover, you are going to prove it by virtue of your records. That's so the next section is, what are the type of accounting records to keep for tax purposes? So it starts from journal entries. Journal entries are they are the entries that are used to post transactions into the ledgers. So you have the general ledgers, the transaction listings. So let's say, for example, your transaction listing, you have sales. You want to have a listing of all your sales. Let's say this is February. In January, you have a listing of all your sales. As you are issuing the invoices, you are recording the sales. That's a transaction listing. That's a ledger, for example. So you also have for expenses. So as a business owner, you don't just model everything together. Let's say, for example, you took Uber from your house to maybe a client's place. You took it from, you had a lot of official transport expenses like that and all that, and you just misplaced all the receipts, or maybe you took the normal taxi. With Uber and the other hailing, whatever, you are able to trace it maybe via your email. So all those little receipts, invoices here and there, they are things that you should actually keep, and you record them. You could have a schedule for, okay, this is the schedule for transport expenses. This is the schedule for electricity expenses. For example, probably you are using your house for as your office. You could do like you could do an estimate, a reasonable estimate, reasonable now, that when a third party hears it, you know, it will not be doubtful. You could do a reasonable estimate of what the electricity you actually use in your house for your business. So the other record as well is trial balance, your management accounts, financial statements, audit adjustments. I just last week I had a 2 years audit throughout last week, and part of these are some of the records they're asking for: audit adjustments, audit journals, bank statements. I know this one is most people don't want to release their bank statement for tax authorities, but it's actually one of their it's part of their work to view as many records that will aid their work, including bank statements. So when they ask for bank statements, they are not intruding your privacy, and that's why it's very necessary as a business owner that you separate your bank account from your personal bank account from your business account, so that whatsoever is going in and coming out of your bank statements for your business is just strictly for business. You don't model it up and you cause confusion, and when there are task queries, you have to be going back and forth explaining. You could actually avoid all that. Go and open the bank account for your business and separate it. I know maybe a number of business owners in Nigeria are not that disciplined. They don't want to put themselves on salary, so they prefer to be dipping their hand and just be doing model everything up. But it might complicate issues when it comes to taxes. The other accounting record that's also necessary is contracts and agreements. You could have contracts with vendors. You could have contracts with technical partners, sales contracts. Maybe the kind of transaction you do are transactions that are in milestones. So by the time, for example, maybe there's a task query or they are auditing that particular they are auditing sales, for example, they might want to see, okay, what are the contracts to substantiate some of your claims and all that. So contracts and agreements are part of your accounting records to keep. So you might need to maintain different folders. Maybe you want to do hard copies, for example, you might need to maintain different folders for each of these categories that I'm mentioning, or probably you want to keep them in electronic form. You could have them in different folders as well that you create and put them there, so that anytime you need them to prove something, you can always get them. The other record is purchases and expense invoices and receipts. I mentioned that earlier. So as you buy, as you incur expenses for your business, try and don't just say, oh, this one is small. This one is small. And you think at the end of the year, for example, you've been buying fuel everywhere, you don't collect receipts. And at the end of the year, when you are trying to probably do a direct assessment as a business owner, and then you are saying, wait, all my fuel this year should be about 70,000, and you put it there. And you get to the tax man and they are saying, okay, so can you substantiate the 70,000? And you are saying, I use my car now, see my car outside. That won't fly. So the best thing is for you, as you are buying those, as you are incurring those expenses, however, it does not matter how little it may be, try and make sure you get the relevant invoices, relevant receipts to be able to substantiate, some of these things. Other records include your sales invoices, cash receipts, your bank and petty cash payment vouchers with their receipts as well, and invoices. Those are very important. Then as well, you need payroll records. So you don't just hire people. We do a lot of things in a very untidy way. You just say, okay, you need somebody. Oh, I need a driver for the office. How much do you want to take? 50K. Okay, I resume. And that's it. There's no documentation. And that one resigns and he leaves. Another one comes and it continues like that. No. For payroll, a part of the record you should have are employment letters. Take your time to just there are samples everywhere. There are samples online. You have employment letter sample that you could just adopt, just put their name, the amount, and all that. Resignation letters, when people are going as well, make it tidy. because I've also had LRS audits, and those are part of the things they ask for, because you are going to, when they are doing, they audit us annually, and so they'll be asking, okay, we want to tell them this person actually spent 2 months in 2021, and how will I prove that? I can only prove that by showing them the person's resignation letter. I will also prove that by showing them the salary schedules that are sent probably to the bank for salary payment. Like, okay, can you see that from March 2021, this person is no longer, on that payment schedule. So that's a record. So I won't just say, this person actually left, and I will expect them to believe me. No. So in this case, they don't work by faith, they work by sight. So, and the sight means that they want to see your accounting records. They want to see all the records that will substantiate everything you are saying, everything you have put in your tax returns. So it's not enough to say, okay, I think I incurred about 50,000 naira airtime this year. No, as you are buying that airtime, take your time to keep that record. Keep that record. So under payroll records, what are the type of records to keep there? Employment letters, resignation letters, salary review letters. It's possible that during the year, you increase someone's salary from 30K to 50K. Let there be a record of that. Pension and NHF remittances. So these are some of the statutory deductions for staff and all that. So as you remit the pension to the different PFAs and all that, the schedule should be there. They also issue annual, they issue annual statements to show all the remittances from each employer. Then the monthly payee tax remittances too. As you remit your the personal income tax and all that, ensure that all the receipts are well kept. They are well kept and filed. Then where they are benefits in kind, maybe benefits in kind are not monetary. You also want those things are also taxable. So you want to also have a proper record of those. Another, the invoices for purchasing them. So this asset register will show what I tried for business. You want to have a schedule of everything. You want to have the serial number. You could have the codes. You want to have, for example, the allocation. You might also want to put the vendor, where you bought it from, the date of acquisition, the amount that you paid to acquire it. Because those are part of what the FIS, for example, what will be used for when you want to claim your capital allowance. They want to see the invoice that you used to. So you said, okay, we bought AC, we bought furniture for our office, we bought this and that for our business, we bought a motor vehicle. Fine. They want to see all those receipts. They want to see all those invoices. So it's very important you also have a schedule where you have a listing of all your assets, all the assets of your business, all the amounts, all the relevant details of those assets, as well as the documents, the support documents that are showing the acquisition of those assets by your company or your business. The other record is tax remittance schedules and files. So as you remit monthly, as you remit and pay, it's very important you have all those files in place. For example, entities that have maybe related to both LRS and FIS and all that, you want to have maybe separate files where you have all those remittance documents, remittance document or receipts, the schedules that you use and all that, make sure it is there. So those ones, those schedules, those files are useful when during periods of audit, periods where there are disputes, they are very useful. The other record to keep is your annual tax returns. Like it was mentioned the other time for LRS, it's now electronic. We do, the last one was January 31st, the last month, and it's just, you just upload it there. But you also want to keep that, because even I was surprised, even when I had the FRS audit last week, they were asking me a whole lot of questions about payroll and the likes. At the point, I was telling them that, come, are you people working for LRS or you are FRS? The way they were just digging into the payroll was so much. So thankfully, we have all those records in place. So it was so easy to give them. The other one is loan agreements and schedules. Loan agreement and schedules. So for example, if you are having loan, maybe it's not even from a bank, maybe it's from an individual, let it be documented. Let there be a document. Let there be an agreement to say, okay, somebody, this person, this also person gave our entity, gave my business also loan for so period, maybe at the interest rate is this amount. It makes things so tidy. Tax computations as well, they are also part of your accounting records. So even when, for example, they come for audits, they also want to see, they will ask for, even they will ask for the tax computations that you used, how you computed your tax liability for the year. Remember that the computation is being done by the company, now it's done by the business. You are the one that will do it and say, okay, this is what I should pay. They will then look at it and say, no, maybe we feel you should pay more based on this and this and this and all that. So you should have all those tax computations in place. So where even if you outsource it to maybe a third party, you have a consultant and all that, ensure you also have those documents in place. As the tax consultant, don't just leave all your files for the consultant. Make sure you have copies. You have copies of all the letters, for example, all the correspondence between tax office and your company, and make sure you always have copies. Just leave everything to the tax consultant. You also have capital allowance computation, schedule of withholding tax deductions by clients, and withholding tax credit receipts. This was mentioned in the last session. I saw a lot of business owners don't really pay attention to this. So when you sell, for example, when you sell to someone and they deduct your money, it's your money. So you should actually follow up on it. And you are going to get what the person that deducted it from you is meant to do is to remit that withholding tax on your behalf. So the government, and you use that money to offset your tax liability at the end of the year. So how do you track it? So the way you even know is when you have a schedule where you actually have a way of tracking all those deductions. So as you are selling and those entities are they are deducting all those amounts, ensure you have a schedule so that you know that, okay, company A deducted 100 naira, company B 200 naira. And you know that, okay, as a whole, I have 1,000 naira withholding tax. Out of that, how much receipt have I gotten? How much is outstanding? Then you can send emails, you can follow up on those clients. When you see that, because at times some people don't pay, they don't pay it, they just deduct it. But when they see that you are very, you are really following up on your money, they will go ahead and pay. So it's very important to have your schedule of withholding tax deductions by clients and your withholding tax credit receipts, because that's what you will use at the end of the year when you want to file your returns and pay your tax liability for the year. That's what you will use to offset it, all those receipts. The other record which also keep is lease and rent agreements, evidence of payment and remittance of withholding tax deducted from rent. So whether it is whether the apartment or where you use for your business is from an individual or a company, it's very important you have that rent agreement in place. You have the relevant invoice. You have the evidence of remittance of the withholding tax that you are meant to deduct from that rent. Then if there are import documents as well, maybe your business is involved in importation and all that, it's also, all those documents are meant to be kept as well. You also want to keep record of your payables and receivables. Those are your debtors and your creditors. You want to keep record of those as well. Then if there are other income that you received, if there are, apart from your normal sales, your normal turnover, if there are other income, maybe you have some investments and then the money just comes, so you have maybe dividends and all that, you want to keep all those records for, to be able to substantiate everything you have in your financial statement, to also buttress the tax returns you are filing. So in terms of accounting records retention, so how long should we actually hold some of these documents? So we don't just say, oh, this year is over, let me just discard some of these documents. No. For example, we had a 6 years audit in 2020. so our company where I work, the company has never been audited before. So we had to do a 6 years audit. So I had to go back into the archives even before I joined, and I started gathering. I saw some, I couldn't see some during when we were trying to go back and forth, to wrap up the audit. Some of them we couldn't substantiate, and then we had to pay again on those items. So it's very key that we keep our records intact. Don't just say, and as a general rule, accounting records should be kept for about 6 to 7 years for auditing purpose, because I learned that, okay, the maximum length of time they can actually audit a company is for 6 years. They can't do more than, I think they can't do more than 6 years. I think it should now be like an investigation or so. So they are to be retained, the accounting record are to be retained for a number of years so that regulatory entities can inspect them and verify that the financial statements derived from them are correct. So you have taken your financial statement to the FRS, for example, or you taking your records to your assessment and all that to LRS to say, okay, this is the amount I've made. And maybe they feel that no, it shouldn't be based on this or that, and they want to come in to just investigate. So those records are part of what will be useful to substantiate your claim. So auditors and tax regulatory authorities are the entities most likely to inspect accounting records. Although recent times too, I've also seen ITF, I've seen NSITF, that's National Social Insurance Trust Fund, writing that they want to come for audit. I have that audit pending. I actually pushed it that, okay, I'll do that by April. PENCOM 2 are now coming. And by the time I looked at what they are asking for, they are just similar to tax audit. So tax audit, all these records we are talking about now goes beyond them. It goes beyond just LRS or FRS alone. Even some of all these other regulatory agencies too, they also require them because they are asking for trial balance and other things as well. So auditors and tax regulatory authorities are entities that are most likely to inspect accounting records. It is not efficient to store them forever since the cost of storage will eventually exceed any benefit to be gained from having them available. So that's why it's usually kept for like 6 to 7 years or so. And now that everything, we are now having e-copy, electronic copies, it's easier to keep them for a longer period. So what are the benefits of keeping proper accounting records? The benefits are enormous. I just mentioned a few here, that it helps you to monitor the progress of your business. So, at times we just think that, okay, the business is doing fine, we are selling. And that's typical to, maybe a number of people maybe like people in the market, they just see that we are selling. But when they look at, they didn't look at the expense side of the business. So to really see that, okay, is the business really doing well? Are we really making profits? What expense is taking a large chunk of our money and all that? So when we keep financial records beyond even for tax purpose now, it helps you to monitor how your business is doing. It gives you a good picture. So you want to know, okay, what line of business is giving us the highest revenue. It helps you to track your spending, to know where your money is going. For example, you will be able to say, oh, we actually spend so much on airtime, or we spend so much on electricity, and you want to be able to go and look at the root cause. What's the cost of that? Keeping those records, we actually help. We show all those things, and it helps you to make informed decisions about the business. When you look at how the business is doing generally, you know where to channel your efforts as a business owner. Maybe there's a product that is not selling well. You know that, okay, we might probably need to channel our marketing efforts to this line. So beyond even tax purposes, accounting record is so key and vital for the business. And even when you want to get loans from the bank, you want to look for partners, you want to grow your business, people will not take you serious if they can't get your records. They can't maybe give us your audited account, give us your financial and all that, give us your management account, and you don't even have it, or you just go and gather one and everything is not even making sense. So it also helps you, keeping accounting records, help you track your deductible expenses. It's not just every time of expense that you just dump into your business. Things that are personal and all that, you just dump everything. It should not be allowable. the kind of expenses that will be allowable by tax authorities are expenses that are only reasonably, exclusively, and necessarily for the business purpose. So it's not you, for example, you want to pay your child's school fees, and then you just put it's paid from the company account. You want to have a family party, it's from the company account. Those things are not business related. So when you keep your accounting records too, you'll be able to see quickly, okay, these are items that should be there, this should not be there. So expenses that are meant to, the expenses that are allowable for tax purposes, that are deductible, are expenses that actually meet that criteria of REN, that it is only reasonably and exclusively and necessary for the business. And when you have proper accounting records, it helps to have accurate tax assessments and returns. And all the items reported on your tax returns are supported. So you have confidence that if they should want to investigate these figures I have put here, I have everything in place to be able to actually support this 70,000 that I said I incurred on fuel. I have all those documents intact. Then I also just did a summary of, okay, for each type of tax that we've, the taxes we've talked about, what are the relevant accounting records to be maintained? For example, for your company income tax, education tax, business profit, they are the kind of records you want to maintain includes your trial balance, financial statements, your tax computations, fees asset register, because that, and purchase receipts, that will be used for your capital allowance calculation, your capital allowance computation, because maybe you bought some asset last year, those ones started enjoying capital allowance, you bought another one this year. So you actually need to maintain a spreadsheet that shows your capital allowance computation. Then you also want to keep your sales records and invoices, purchase and expense records, contract and agreements. Those are when they want to audit your company as a whole. Those are part of the records they will be requesting for, the authorities will be requesting for. Audit adjustments, schedule of withholding tax credits to offset your tax liabilities. Then loan agreements, payment vouchers with their receipts and invoices. And it's not just sufficient to keep all these documents. You have to ensure that they are properly kept. So I'm not just saying number one. For example, your sales invoices, you have number one, and from number one, you jump to number three. You understand? The audit we had last week, we had, when we gave them some of our sales schedule and all that, by the time the person started working on it and saw that, oh, there were some invoices that were omitted, he had to take out all those numbers, and he told us, come and explain we come and explain all these omissions. So as you are keeping your record, your vouchers, you are numbering them serially, you are ensuring that they are properly in terms of the numbering. There are no omissions, because when there are omissions, there are suspicions that, okay, maybe they've been tampered with and all that. So because they want to ensure that the listing they are working with, that's the authorities now, is actually complete. There's completeness. So part of what you're ensuring in keeping sales invoices is that it is in terms of the numbering, it is serial. It is serially numbered. Then the withholding tax, we have purchases and expense ledger, purchases and expense invoice and receipts, rent agreements, contracts with vendors, bank statements. So if you have 3 banks or 4 banks, you want to ensure that all those bank statements are available to be provided. Accounts payable ledgers, your monthly withholding tax remitter, because at times, for example, FRS do come for desk review, even before they come for audit. We had a desk review last year, and we had a tax audit on the same year this year. So at times they will say they are doing, it's not just, at times they will just notify us, oh, they want to come for withholding tax and VAT compliance checks. So by the time they come in, they want to expect us to give them all our payment vouchers, our bank statements.
Hello, ma'am. Can you hear me, ma'am? Yes, we can. I'm sorry I have to interrupt because we're really running out of time. But there was something you mentioned in the withholding tax, and there's a question already in the chat room. And I just wanted to use that so that you can help explain that, and then we can move to the next facilitator, because we have just a few minutes left and I don't want to keep everyone waiting beyond the time we had agreed. I know we still have more. We'll probably have to share the slides with everyone as we have agreed. I'm so sure there'll be other questions in the process, and then we can share it with you privately, and then we can share it back with the participants. But let me go to the question quickly, right? The question is, if you're using your home as your office, can you use the house rent as part of your record for the office financial statement? And then we can use that to wrap up, so we can call Mr. Olani Dada to come in.
Yeah, you can actually, if for example, you are using a 3-bedroom flat and probably you took a room out of it as your office, it's properly set up. Remember that even tax authorities, they are reasonable. So I come to your office, for example, they come to that location, they could see that this is actually an office, a proper office. Maybe you have your staff there and all that, and you could see the rent, it is reasonably shared. You understand what I'm trying to say? And it's substantiated. Definitely, you can put in that portion of the cost and substantiate it. Maybe you could even use square meters in measuring and all that. Just do a reasonable assessment, and you could document it. So tax people they are also not, they are reasonable. So they'll be able to also look at it, looking at the reasonableness, and be able to also allow that particular expense. So that's possible. People do use their houses for their offices and all that. So far, it's, that can be proven.
Just to help clarify that, in substantiating, you're saying that I can decide to say, okay, if I'm using a 3-bed, one of the bedroom is what I'm using for my office, then like 1/3 of the rent is what I'm going to put in my financial statement as for my company. I'm just trying to get like a number to help us understand.
For example, yes, that can be. For example, you have your sitting room, you have 3 other rooms. So I want to look at maybe, let's say like 1/3, yes, something like that.
Okay,
something around that.
Okay.
Yes.
What if it's a smaller company? Maybe somebody with a small company, to help just make their recording easy, their record keeping a little bit easier. I just want something that, irrespective of the industry, whoever is here is, whether the person has a big company or just a small size company, just to help in their reporting properly. How do we make it a little bit simplified? The little things they can put together.
Okay. What you could do, for example, you could outsource it.
Okay.
You could outsource. Are you with me?
Yes, ma'am.
So what you could do, you could outsource your financial reporting. These days, we have a lot of freelance accountants that are doing some of these things. Then there are also software that you could actually use. There are like Zoho, there's Zero that you could actually generate your invoices from. You could input your expenses on. So it generates your record for you easily. So you could actually pay that, and they are not too expensive. So we should also learn to invest in accounting software. We should also learn to engage services of professionals. A lot of time we don't value service of professionals in this part of the world, We just we are looking for cheap things. So we can engage accountants to do things for us. So you can be sending them your monthly records. They will put it together, they will ask you questions and tidy it up. So that's very possible.
Awesome. Thank you so much, Mrs. Tentayo. We're very grateful. Can everyone please give a round of applause to our facilitator? I know we practically we didn't allow you to finish up on your slides, but we really also need to give Mr. Olani his own time to be able to share his thoughts and his experience with us. So we're very grateful. Thank you so much. So quickly, I'm moving to our final facilitator, Mr. Olani Dada is going to be talking about tax obligations of a LTD company, and he works with the SDG Consulting Associate. I'll still have to read his profile. He's a chartered accountant, economist, and management consultant with over 30 years of experience in helping organizations understand and succeed in matters of audit, accounting, taxation, and management. He has competencies that cut across several industries, including financial services, oil and gas, maritime, capital market operations, manufacturing, and the public sector. He's a managing partner of SDG Consulting Associates. Mr. Olani Dada, I know that the time is fast spent, so please bear with us, and I know you're going to keep the time. So thank you so much for your time. Please, the floor is yours. You're muted, sir. You're muted.
Okay, thank you very much. Good afternoon, everybody. I believe everybody can hear me.
Yes, we can, sir. Thank you.
Thank you very much. As I've been introduced, my name is Olani, a child accountant in practice. Was a few years under his belt. So I've been told to give us a talk on tax obligations for a limited liability company. So that's what I'll be talking about. Do I share my slide or how do you go about it?
Please go ahead and share your slides, sir. And
Okay.
you have about 15 minutes, sir. Thank you.
How do I even do that? I'm trying to share my slide. How do I do that?
Okay, so at the bottom of your laptop.
Yes, I know I've clicked the screen. Okay. Where's my? Okay. Okay, can my slide be seen now?
Yes, sir.
All right, good. So thank you very much. I'm to give a talk on tax obligations for a limited liability company. So what I've done basically is just to outline it in 5 subtopics: tax obligation, companies income tax, value-added taxation, other federal taxes, and then tax exemptions and benefits. So that's what I've done. So I'll take them one by one. So let's talk about like tax obligations. The early 2 speakers went extensively over the tax obligations of an individual and also a corporate entity. You know, it's a statutory responsibility of most organizations to have the records and prepare tax. And the law that where emanates from government, that everything falls under, is the Company Income Tax Act. It's been amended over the last previous years, and particularly in the last 4 years, there have been a lot of advancements in tax management since 2019. Every year since 2019, I'm very sure everybody will be aware of the Finance Act every year, where government rekindles, adjusts, tweaks the tax laws every year to fine-tune it to make it more cogent and specific to enhance the overall government tax policies. So the company income tax is the overall legislation of which all company taxes emanate from. And and another thing I want to talk about is that company income tax is being managed by the Federal Inland Revenue Authorities. You know, we operate a 3-tier tax system in Nigeria, where we have federal government, state government, and local government. So the federal government's tax authority is basically the Federal Inland Revenue Services. And of course, earlier we've had somebody who spoke about the state taxes, which is called State Internal Revenue Services. And then we also have a 3rd tier, which are local governments, which are basically rates and levies. So we have what we call a 3-tier tax system in Nigeria. So for companies fall under the federal government, basically under the Company Income Tax Law. So they're all managed by the Federal Inland Revenue Services. And if you're an individual or a business name or a partnership, you follow that state. But if you're a limited liability company, either the private limited liability company or a public limited liability company, you fall under the Federal Inland Revenue Services. So those are people to assess that. So let me talk about, so I've already spoken about this, like the Federal Inland Revenue Service administers or oversees income taxes. And the company income tax is a tax on profit. That's a very important point to note. company income tax is a tax on profit. It's not a tax on capital. It's not a tax on turnover. It's a tax on profit, meaning that your company must declare profit before they can be taxed. If there is no profit, in quote, there is no tax. But as long as there's profit, so that's where all the points the last speaker was talking about in terms of record keeping come very cogent. You must keep your records in a very good way to the extent that you can show that you made profit or you did not make profit before there is tax. And then I also want to emphasize that tax is only on resident companies. Resident companies are liable to corporate income tax on their worldwide income. You know, when I say registered companies registered in Nigeria and operate probably in Ghana, Europe, or wherever, your company's tax is assessed on its worldwide profits. You know, you can have a company in Nigeria, maybe you have an online business, or you have a consultancy which operates in the Far East or South America. Your company income tax is going to be based on your worldwide profit. You know, so it's important to take note of that. While non-resident companies are subjected to tax on the Nigerian source income, meaning that if you're a company, you are not registered in Nigeria, for instance, you're resident in Switzerland or in Ghana, but you do business in Nigeria, your Nigerian income will be subject to company income tax. You know, so and then company income tax is based on accounting profits. You know, just as the former speaker was talking about record keeping to determine tax liability. So what she was talking about is very, very important. And I would encourage all the participants to probably, if to maybe get her paper and go over it, or all possible contact her so that she can put you through all that is required to keep proper accounting records, because it's important to have adequate records so you can determine profits. And then company income tax is paid by limited liability companies, meaning that both private limited liability companies, public limited liability companies are subject to company income taxes. So let me also talk about how do you now assess tax. There are three basic methods of assessing tax. You must have heard of best of judgment. Another one is self-assessment, another one the currency of assessment. I had a lady was saying that although that was on the state level, where she said this is how much she was intended to pay, and the tax authorities were talking about were not agreeing to what she was saying. I guess what they're trying to do was best of judgment. Now, best of judgment is only in a case where there are no adequate financial records. That's where best of judgment comes out. Because you don't have good records, you don't have financial records, you don't have receipts, third-party documentation, but need to be assessed. So there will be a best of judgment. You know? So this is the way tax is assessed by relevant tax authority in situations where tax not have any financial records. You know, there are no records, and you must be assessed. So that's why that best of judgment comes about. And then, but the main one is self-assessment, you know, where you have records, you have all your receipts, you have all your financial accounts, you have your audited accounts. You now self-assess yourself and determine the amount of tax that you are liable to pay. Because the tax law is there, the tax law determines what you're going to pay. You assess yourself and determine what you're supposed to pay. And then it's also important to know that the currency of assessment. Now, tax is paid in the currency of the income, meaning that if you, number one, you are a resident company or a non-resident company doing business in Nigeria, the currency of assessment is based on the currency of the income. Meaning, if you do your business and you get Japanese yen, your tax is paid in Japanese yen. If you do your business and you're paid in pesos, your tax is paid, or you whatever. So you get the idea. The currency of payment of tax is based on the income. So a case where you do your business in dollars, but you want to pay naira, you're already contravening the law. near going that route. And there are sections in the Act that specifies all these contraventions in terms of the currency of assessment. Then I'll quickly talk about the company income tax rates too. I guess the earlier speaker may have mentioned it. Currently, we have three categories basically now. The main company income tax is charged at 30% for companies who have a turnover of over 100 million. As I said, tax is based on profit. So you must have your account, your income, your turnover, less your expenses, whatever. So companies with turnover of over 100 million, your company income tax is assessed at 30%. And then we have companies who have a turnover in between 25 and 100 million. Now it's been assessed at 20%. And likewise, companies with a turnover of less than 25 million currently do pay tax. These are developments of the last 3-4 years since the new annual financial act. Prior to that 2019, everybody was paying 30%. But from 2019 financial act, the government has been changing things in line with, events and stuff like that. So that's why we have this 3-tier tax payment regime now. Then another important aspect I want to talk about, which most of the previous speakers have also spoken on, was withholding tax. Because withholding tax is a very cogent and important aspect of tax. It's basically an advance payment of corporate tax, both by individual or corporate, meaning that if you do any assignment as an individual or as a corporate body, you do any assignment and you are paid, the onus is on the person making the payment to withhold 5% or 10%, as the case may be, on your fee and remit on your behalf. If you're as a corporate body, you have a TIN number, so you render services, 5% or 10% is withheld, is remitted on your behalf, meaning that it's remitted, your TIN number is properly acknowledged monthly on your behalf. It's an advance payment of corporate tax. The idea is that government does not want to wait until the end of the year before you prepare your account and then you now determine, okay, this is how we're going to pay. As you are earning income day by day, month by month, just drop something in quotes in government coffers in your name. So by the end of the year, when you now prepare your account and determine your profit, you will find out that you've already paid your taxes. So at the end of the year, you will not have to pay anything, or if you're going to pay anything at all, barely minimum, because you've been paying your taxes monthly. Maybe 10% has been deducted from the earnings monthly, basically as you earn your income or turnover along the line. And for corporate entities, it's basically about 10%. Of course, there are various ideas for dividends. If you earn dividends, or you earn rent, or you earn director's fee, or you hire your equipment out, or you earn royalties, whoever is paying you all those fees must deduct 10% on your behalf. So it's important to note that it's being deducted on your behalf. And so it's an advance payment of corporate tax. Now, I will now talk about allowable deductions. As I said, record keeping that's why the last speaker's paper is very important. Record keeping is very vital. You have a record keeping of your income, your turnover, of your operating costs, of your administrative costs before you have your profit. But it is not all expenses that are allowable. Some are allowed, some are not allowed. But so the law says that in ascertaining the profit under the Act, there are certain deductions that are allowable, meaning that there are certain expenses that you must deduct to determine the profit. There was a question that I had in the last topic. We were talking about reasonableness. Of course, like the example I was giving of where a 3-bedroom apartment is now being used for office. No? So it is reasonable for you to have maybe 1/3 of that as expenses. It's reasonable by virtue of the fact that you're operating that premises and you have you need to put anyway, so 1/3. If you now want to charge your whole rent for that particular business, that now becomes unreasonable for the simple reason that that 3-bedroom apartment is used for other functions apart from office. So that's where the idea of reasonableness now comes in. So, but there are allowable expenses, meaning that all expenses that are related to the business, you are allowed to deduct before you get your profit. You know, before you get your profit, and for your profit, you now pay your taxes. Then let me now talk about, there are also expenses that are not allowed, meaning that you are not allowed because they are not related to the business directly. For instance, maybe you took a loan or to settle a business and now want to pay back that loan. That capital is not an allowable expense. Yes, you borrow money from somebody and you want to pay it back. Under such circumstances, it's only the interest element of that transaction will be an allowable expense. The capital itself is a balance sheet item which is not will not be incorporated in your profit and loss on the income statement to determine the profit for that period. And you know, or taxes on income that you pay in another country, for instance, will not be an allowable expense. Or, for instance, maybe there was a loss you incurred a loss of business, and on that loss, you're going to get an insurance claim. So that loss itself is not an allowable expense. So the law specifically determines the expense that will be allowed for you to deduct before you determine the profit, and then those are not going to be allowed. So that's why your record keeping, you know, is very vital to determine what is allowable and what is not allowable. I wanted to make mention of something before I went, but I think I've spoken about it in terms of the tax computation of rates after this alignment. Anyway, I'll go to the next thing I want to talk about, which is VAT, because VAT is also something that is quite prevalent. The discussion of VAT is all over the place. Now, VAT is important. It's when you consume and you pay. So if you don't consume, you don't pay. And it's a multi-stage tax in the sense that you may acquire some products which you pay VAT on, and then you now work on them and you now sell those products and you now charge VAT. Or the product you manufacture are intermediary products which you sell to somebody else who now buys them and manufactures something else. So what I'm trying to say is that it is only when you consume that it is the final consumer that bears the burden of VAT. So whatever VAT you pay, as long as you are going to sell those products for another person, it's very possible for you to recoup the VAT that you are paying. That is the output VAT you pay. It's going to be an input VAT for somebody else, so you can recoup the amount that you pay. And I'm very sure everybody will be aware that currently the VAT rate is now 7.5%. Initially, you know, since 1992 that the VAT came to the country, it was 5%, or 2 years ago that we changed to 7.5%. Of course, the government has seen as a very vital, very important means of tax collection. So they increased the rate slightly to 2.5%. And then it's also important to note that there are some goods that are zero rated, you know, export goods and services, meaning that when you render your services on your invoices, you do not put VAT Because by virtue of the law, they are zero rated. And of course, you must file your VAT returns monthly before the 25th, before the 21st of the next month, of the preceding month, to avoid penalties. It's also important to note that Nigerian companies that are carrying VAT transactions with non-resident pay VAT within the country. For instance, now there are some non-resident companies who do business in Nigeria, maybe software companies, and things like that, and they are being paid. When they send out the invoices, they put VAT on it. But the person paying for those services can, by virtue of the law, withhold the VAT on behalf of the non-resident company and remit to the inland revenue on behalf of that non-resident company. So those are the new developments under the Finance Act over the last few years, which have brought them up to bear. Also, government bodies, both federal and state, can also withhold VAT, meaning that if you render your services to a government body, you render your services to the federal government or state government, blah blah blah, and you put your VAT, your 7.5% VAT on the invoice, government can withhold. That means they wouldn't pay that VAT to you. The law allows them to withhold it, but they must remit it on your behalf. Because there will be every month they will prepare a schedule of all the VAT they have prepared and remit it on your behalf. Likewise, the oil industry too. For government, that it's been on for a while. Both the government and the oil industry have been allowed to withhold VAT. But any other industry, when you render services to them, you put your VAT on top, they must pay that VAT to you, because the onus is on you, the company, to remit that VAT to the government's coffers.
Excuse me, Mr. Dada, can you
Yes,
answer?
please.
All right, so we know already fast spent, and I know you still have more to say, but I was just hoping we could address some questions. Okay. And then we can use that to expatiate on what you're going to talk about. No, and then because we need to manage the time, we'll just use the question to round up the program. Okay, so the first question is there tax return in Nigeria like in the US? That's the first question. Do we have tax returns? Do we have tax returns in Nigeria?
Yes, yes, tax returns. Like the monthly filing is a VAT return. It's not called tax return, it's called VAT returns. Annual filing, that's it. So annually you file your account, you prepare your audit, and then you file your account. So that is annual. So you might call it tax filing. There's an annual tax filing. The VAT is monthly. For the company is monthly, and then for the company as a whole is annually.
So I can get a tax return for as long as I am consciously keeping record.
You don't get a tax return. What you get is a tax certificate.
I get a tax certificate.
Yes, you don't get a tax certificate. What happens is that when you file, for instance, now we're in February now, we're preparing accounts for 2021. We have up to June this year to prepare accounts and ensure that they get to the relevant federal revenue before June. After June, any company whose accounting year end is 31st December will start paying 50,000 naira every month as penalty. So we have up to June, from now to June. For instance, like banks, financial institutions and co, they have up to March, March, to file their returns, with CBN.
Okay.
So they can, but to get your tax credit, you have to file your account with an annual fee. It's not a monthly, it's an annual, and get your tax certificate. Like you do your self-assessment, you file your accounts, the tax authority will look at it, they will do a desk review. They will not come to your office immediately, just a desk review. They look at what you have filed. It's okay, it's okay, it's okay. They query, okay, do this, do that, do that, and then they give a tax certificate. So it's annual. But they may come for a tax audit, maybe 2-3 years down the road, to come and review, to actually look at the source documents of what you actually filed like 3, 4, 5 years prior.
Okay, all right. Hopefully that's clear that I just wanted to be sure that we didn't have the tax returns. I want to be clear that can I get a tax return? And if I can get it, how do I get it? And since you said it's a tax certificate, that's fine.
Yeah, what happens is that you annually file your accounts with the Federal Inland Revenue. You know, there are jurisdictions. For instance, Lagos State, there are various jurisdictions. So you file to the tax office that is within your jurisdiction. For instance, if you are in Ikoyi, if you are in Ikoyi West, you file Awolowo Road. If you are in Ikoyi East, you file somewhere on Kingsley Road. Look, there are jurisdictions, so you file to the tax office relevant to, you can't just file anywhere. You file to the tax office that is within your jurisdiction. And then it will be assessed. Desk review, meaning that not that they will come to your office now. They just look at your account, okay, you say your turnover is this. They will look at the reasonableness of what you are doing. Okay, for maybe you are a law firm. I mean, let's say you are in a hotel. For instance, a hotel, okay. Okay. You look at your expenses, you look at whatever. You file your VAT correctly, your VAT is up to date, all the others are up to date, they issue a tax certificate to you. They may now come to your office 2-3 years down the road to actually now look at your records in details to do a tax audit, but they will issue a tax audit to you by virtue of the fact that you have filed that item before June of the preceding year.
Okay. All right. So I know that, well, is there any, I would like you to just give us like an overview, like a summary, you know, just emphasizing on specific things that we can take out of here that everyone has to do, and then we can use that.
I guess the important thing is to seek knowledge, get expertise, to determine, it's not that to get expertise, to determine what you really do as a corporate entity. Seek knowledge. When I say seek knowledge, by virtue of seeking knowledge, you will avoid pitfalls. You avoid pitfalls in terms of filing, when to file, what to file, and then in preparing your account, your presentation. I think I heard one of the previous speakers were talking about tax avoidance, tax avoiding. Those are things that are technical, what I was speaking. But it's a case of terminology. How do you classify your expenses? How do you classify your activities? How do you record your activities? Those are little things. If you seek knowledge, you seek understanding, that will guide you in determining what to do, what not to do, to avoid the unnecessary headaches that people encounter when they run into tax challenges.
Do you have any platforms that we could suggest for us to be able to gather this knowledge? Do you have any platforms that can be shared with for them to get it?
I guess a forum like this is also a place where one can seek knowledge. You know, sure. A forum like this, of course, the Chartered Institute of Taxation now is quite versatile. They have a website where, I mean, they have a lot of papers, and there are some tax consultants who regularly issue circulars, issue position papers on specific issues. I mean, not that detailed, but they give you an idea of what, for instance, if there's any new act or there's any new pronouncement that relates to taxation, or there's any issue, for instance, just as there's been some issues with all these hotel and consumption taxes, or things like that, they are consulted and issue position papers and circulars that can encourage the public or increase our knowledge, basically.
Okay.
So any other thing?
I think that's it, basically. You hit the nail in the air. Thank you so much, sir. Does anyone have any other question before we release Mr. Dada? Does anyone have any question? You can raise your hands if you have any. Okay. I know we've taken our time. Thank you so much for giving us your additional 20 minutes. Mr. Alani Dada, we're very grateful for your time. Can we please give him a round of applause? Thank you so much for sharing your knowledge, your insights, and all the things that you have learned over the years with us. And we're glad that we're part of this forum so that we can learn, and then begin to apply them in our businesses. I'd like to also say thank you to everyone that has been on the platform from the beginning. Thank you so much for your time. Thank you for being attentive. Thank you for keeping to the house rules. Thank you for sharing your questions, pointing yourself out and allowing, our facilitators to also bear themselves out and teach us the things that they've learned over the years. We're grateful for your time today. We're definitely going to share with you the videos as well as the slides, so check your emails. Another thing we're going to share with you will be a feedback form, because we would like to hear feedbacks, not just on the program itself, but, subsequent webinar that we can, that Shala Kwadishi and Associate can bring on board, other topics that will be relevant to you or to your industry, depending on where you work and where you're doing your business. So you can as well ensure that by the time you're looking at the feedback, share your thoughts so that we can begin to look at those areas and they can address them in the future. I'll hand over to Barrister Sholakwe to give our final remarks, and then we'll be done.
Thank you very much, Dr. Thank you so much. I want to really appreciate our facilitators. And first, let me apologize that sincerely, I know that Mrs. Temitayo had so much more to share. Mr. Olani also had so much more to share. And the good thing is that the slides are here, and certainly I'll be sharing with every one of us. So we can always go over it. And I would also want to urge them, all our facilitators, to put their contact in the chat room, please. And then we can also share their contact with you. Mr. Igo has shared his own contact, and we will still send to you. So if you have any professional need for their services, please reach out. Feel free to reach out to them. I'm sure you'll be glad to know you were a part of the participants here and they can be of help. Thank you, Mrs. Temitayo Ogun Tade. Thank you, Mr. Igo. Thank you so much. Even though I want to tax you again to help talk to your legal department, let them verify what I did mention before, the Supreme Court judgment on the hotel and occupancy. I would like to get a feedback on that so we know how to proceed going forward. Thank you so much. And thank you for your time, everybody. Thank you. I hope this has been really worth your time. For those of us that were to get our books, please, from the email we sent, kindly forward your email address or your address you want the book to be delivered to us. Yes, this is the book that we'll be sending to you. Your Business and the Law is one of the books that we publish. We'll be sending to your address. So kindly send us your address where you want the book to be sent to, and it will be sent to you within 1 week. Thank you very much again for being a part of this. I look forward to your feedback. God bless you. Have a nice evening.
All right. Thank you very much. Have a lovely time and have a lovely day. Still have a good day ahead. All right. Bye.